Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Hello.
What's up, lads? From Hola
Howdy,
Prime.
howdy.
Joining me as usual, Coach Tiger, and not as usual, Coach Alex. How's it going, guys?
Yeah, good. How are you?
Going great
not
as
too bad.
always.
How was your weekend?
Pretty good. Went out and hung out with the boys for a bit and just relaxed all day yesterday and Saturday. It was great.
Nice.
Yeah, and I was telling Tiger this morning that I went out for some Mexican and managed to get myself food poisoning. So it wasn't as nice as Tiger's weekend, but we're here now. We're recovered, so ready to do some trading.
Richard,
This
I think
happened
that
at
means he had
some
a few
restaurant
too
or something. Takeaway.
I think that means he had a few too many drinks. That's what he wants us. That's what he wants us to think.
Let's be honest
Picking
here,
on-
Alex. Too many tequilas.
Yeah.
Yeah.
We don't hide secrets.
I can't have tequila, otherwise, but it would be the same result. It would literally be the same result if I did have even a single tequila. I cannot do that.
I'm with you on that. I can't.
I wonder why.
Just a few beers, that's it. I can't do the shots and the tequila and all that anymore. But having said that, yeah, Richard, like I was telling Alex, had a few pickle shots the other night. So I think they basically put pickle juice in vodka. Yeah, they were only $2 a piece, which was bad news. So yeah, we had a few of those.
Nice.
Yep. And it's a small world after all, gents, because so one of my friends that invited me out, he invited one of his friends out, and come to find out he's a Forex trader as well. Had no idea. I'd even met the guy a couple times at some Kansas City Chiefs parties for the playoffs when they were in the playoffs here a couple years ago. And we just never got to talking about careers or what we do, but we did that the other night. And it turns out he trades very similar to me, very similar time frames, order blocks, and things of that nature. So, yeah, I said, did we just become best friends? He said, yep. So, yeah, and he lives like 15 minutes away, so we're going to go and compare notes. But Alex, he actually works.
Someone who actually understands it.
Yeah, it's like a needle in a haystack. But he actually is a advisor for a firm in Australia. I didn't even know this till the other night. So, yeah, I don't know the name of it, but he's got his own business and his own trading business, but he also does something with an Aussie firm. So, yeah, I'll get more details on that. It was a little noisy, but no, that was pretty cool. That was just really cool to run into somebody that does the same thing I do, because that's the first time since being here in Kansas City, which is a city of 1.1 million. That's the first time I've actually run into somebody that actually trades Forex. So, I mean, I know of a couple others that trade stocks, but the first one for Forex. So, and he's been doing it a while.
Yeah, I don't know many people at all in my circles.
Yeah.
And those that I do know are like from overseas.
Yeah. Well, everybody here has a Robinhood account, and they do the whole fractional trading on it, but nobody really understands it in depth. They just listen to a friend's recommendation, right? The last thing you should do. So, yeah, so that was pretty cool, though. So, what about yourself, Richard?
Everyone in the chat, good morning. Really?
I'm actually going to interrupt you guys. I've got a trade. I've got a trade already. Sorry, guys. I'm going to jump in already. Back end. Share the screen.
That's what we want to hear.
That's right.
What a set card. Here we go. So we definitely can still set a limit order for those that want to watch. I literally was just in saying hello, and then all of a sudden, like scalping, it comes back. But hey, it might come back to entry. We'll have to see. Now, this one I don't particularly mind. Let me just make this bigger. So this is gold. This is a gold play right here on the 1 minute. So we've got our 30-minute open. Mm-hmm. It already broke out to the ceiling previously. So we've already got that breakout, and it's come in. It's literally just been bouncing off that VWAP, which we really, really like. Yes, I would have loved it to hit here and then explode up. However, there is really no rule with how long it can stay around in the range. Now, again, if it is going to be consolidating for that 1 to 2 hours, 2 hours really, ranging consolidating, you guys know I'm going to not hop into that trade. But literally through here, we came back and we touched it for the third time. And then we had that impulsive, explosive move. So technically, our entry would have been right here. I just got that slightly wrong because our solid line did not break until here. So when that solid blue line broke, we are able to hop into the trade, and now it should be shooting up through here. We'll give it a little bit more underneath this low on the stop loss. Obviously, we'd want to do that. And you might be wondering, why is this red line here? Simply because it's our break-even point. So if you guys were in the trade and you were sitting here, you would literally move it to this level. That's how quickly it can go. Again, we're not going to have it dead at break-even. It's not something we're going to do. We're going to cover those brokerage fees. We're going to have it a little bit higher. In this case, it's looking pretty good. It's looking pretty bullish. Now, this is the point that I have here because, in fact, it should be right here because that is where our second line is. It is printed a little bit over to the side, but we can see that here, and that is what we'd be going for. So a 1.29. Now, whether it's going to hit there, I don't know. We'll just have to wait and see. Maybe we'll find out in the next minute or two. Hopefully we don't get something so bullish that it turns around. However, if I am looking to the side of me, obviously we're at all-time highs. So there's nothing really going on. Well, at least on the 1 minute, we're looking at that right now. Going to the hour, we're doing a very similar thing, right? So we go on to that 1 minute. Potentially, we could just be doing a double top. I mean, potentially that could be it. We've just done this. Now we come back down, and then we're bearish. I mean, who knows? There's so many ways to go about it. Even though obviously with trading, we know it's either up or down, essentially. So I'll wait on that. I might as well quickly go over the other two here while we're at it, and then just quickly get back into it with the lads. Oil sitting here, problem child, as Coach Tony called it this morning. I think he said the red-headed stepchild. No one wants it. Yep. Is what he called oil earlier on today. Yep, I persist. Here we are, and we're still trading it. So this is okay. It is starting to range, which isn't the best. You can see it already through here. Like, double tops, double bottoms, essentially. I'll make the call within the hour whether I do want to play this or leave it alone. Look, it's probably going to be left alone unless we get a really nice breakthrough. I'll be moving my stop a whole lot earlier as a special case in case we're hopping in and it does just decide to range. And then we come over here, and of course, we've actually got another one sitting up over here. So we technically just broke out of the range there. Of course, this has happened while I'm looking at another one, Euro USD over here. I think it'd be fine if you still wanted to hop in. I don't think it's going to be a massive issue. Stop would be there. And we would be going for, where's the next line? Should it come up? Let me just see. So that's 7.4. And that is 7.4 up here. So quite a large one. But we would be going for something like this. So that's what we'd be looking at on these two. And we're just going to let them play out and see what happens. Again, with this one, very similar tail to gold over here. Kind of consolidated for a little bit. Then it's come in, it's hit here, and we're starting to shoot out. But again, this one, it's absolutely fine if you missed out on it. I've missed out on this one. I'm definitely not in it. In the gold, have missed this one. So I'd be happy as long as it doesn't hit my 1-to-1, which would be somewhere around this area here, to set a limit order and hop back in. So if it did come back down and touch this area, I'd be happy to hop back in from here. That's absolutely fine for me. So I would be doing that in this area here. But anyway, I'd be leaving this. Cool. Those are the trades as I see them right now, and we'll just let them go and see what happens. There you go.
Nice.
Early action.
Right out of the gate.
That's a big RR for you, isn't it?
Good stuff.
Kind of a big RR.
Yeah, it is.
Yeah.
A 1.29 and
awesome.
a 1. A 1-to-1. It just seems for whatever reason on the Mondays, after me saying, oh, guys, I only go for a 0.8 and 0.9, I swear, we go back to Friday, it's like 0.6s, 0.5s is what I'm hopping into. Yeah. And then the Mondays, for whatever reason, I've just been having tighter stop losses. I don't know. I'm loving it right now. But again, this is not the normal for me. It's not the norm for sure. So, yeah, we'll see what happens through these two here. But yeah, action straight out the gate.
Great.
That's great.
Well done.
Yeah, that's great.
Well done.
Yeah. And I mean, I'm kind of keeping an eye on gold too. So not too far from where your entry is actually. So it's a pretty good little spot there. I was keeping an eye on. Yeah. Just want to see that. I just personally want to see that. I don't want it to double top. I want to see it. If I get into it, I want to see it close above that high to the left and then come back.
Yeah.
But obviously the potential damage there is liquidity. Liquidity slamming it back down. But we've been saying that for how many weeks now, and it's still going parabolic.
Yeah, exactly right.
Absolutely.
Yeah, got a little area. Yeah.
Hey, Samuel.
Yeah.
Good morning.
That's good.
Someone's saying that he's already reached his 3% on his evaluation. Great stuff. Awesome stuff.
Wow. Well done.
And he's not touching gold anymore today. Prefers day trading on the 1 hour and do not do the 1 month time frame. Perfect. Good stuff. Stick with what you're doing, Samuel.
Heck yeah.
Looks like it's working well. Good stuff. Keep it up. Consistency, right?
Is that 3%? And how many?
Coach Alex hit a good profit on gold from the Asian session. Yeah.
Let me have a look.
Samuel, how long have you been in that challenge for the 3%? A week? A few weeks? I was just curious. But no, either way, the good stuff. That's good stuff.
Didn't we give Samuel that account, was it a couple of weeks back?
Yeah, I feel like it was. We give away so many, Richard, it's hard to keep track of everything. Like you say all the time.
I just remember the names, but I can't remember when.
I think Samuel was on this morning, actually, with us, Coach Tiger. If I'm not mistaken, I think Samuel Trades was here this morning. So that's dedication. That's dedication right here. Because I'm tired and I've been here since this morning. So you're in a different time zone. This has been my full day.
Yep. Yeah, it always throws me off when you say this morning.
Yeah.
To me, this is morning. Good stuff.
It is morning.
Yes.
I love
Yeah.
it. Whopping 3:15 a.m. where I'm at. Yeah, I'm burning the midnight oil as always.
Hey, so, yeah, he started the evaluation on Thursday and purchased the account last week. Okay.
Nice.
Oh, okay. Very
Good
nice.
stuff.
Yeah, keep it
That's what
up.
I like to see.
Just be careful.
Good going.
Just be careful, Samuel, with your sizing. That's the only thing I would recommend. That sounds like a pretty good chunk of change in just a very short period of time. So, yeah, that's just always what I just say is just whatever you do, don't over leverage, right? It's better to get there in a slower time than all at once and blow your account. So just a heads up on that. That's all. That's all I would recommend. But good stuff either way.
100%.
Good.
Yeah, absolutely.
We got Giannis from Greece. Hey, good morning. Good morning.
Oh,
Your finest
Hey,
finest
sorry, I
basketball
missed your
player.
name in the chat. there.
Yeah, your finest basketball player
Good morning.
plays just north of where I live, about I guess it's probably about a 5-hour drive. Milwaukee Bucks. Well, he's
Milwaukee, yeah.
my opinion, the best player in the league. I mean, you can't stop that guy. He scores a ton of points. He gets a ton of rebounds. The dude he's like almost 7 feet tall, but he runs around like a point guard, meaning he's quick. Yeah, that's Giannis Antetokounmpo. I think I said that right. So.
Oh, I've got no idea how to say it.
Yeah,
That's from Greece then, right?
Yeah, he's from Greece, or his nationality is Greece. I don't know if he was born there or.
Okay.
Yeah, I'm pretty sure he
Or
was
if he-
born there.
Okay, you follow NBA a little bit?
Yeah,
Yeah,
a
that's
little
becoming-
bit. I do know Giannis.
Yeah, dude's awesome. That's right. Basketball is getting
Yes.
a little more popular in Australia, isn't it?
Yeah. I mean, we've got like, what is it? We've got a few like ex NBA stars. Oh my gosh,
Andrew
my
Bogut?
mind's gone blank. Helps LeBron.
Andrew
Deladova,
Bogut?
Matthew Deladova.
Oh,
He's
Matthew
big.
Dellavedova, yeah. And he's into the
Dellavedova.
crypto game as well. Gosh,
Yes,
that's
he
tough to say too.
is.
Dellavedova. Yeah, he's on my LinkedIn.
I
He's
think
on my LinkedIn connections. He's got him and a couple other players, I think. What's the other guy's name? Oh, I can't think of the name off the top of my head, but yeah, there's a handful of NBA players that are into the crypto, and they've got some businesses that they're working. So pretty cool stuff. But yeah, you got Andrew Bogut,
Andrew
Luke
Bogut,
Longley.
yeah.
Yeah, Luke Longley with the Bulls
Chris-
in the 90s.
Yeah, was it Simmons? Isn't Simmons
Simmons.
Australian? Ben Simmons, yeah.
Yeah, so he went to Kansas University, just 20 minutes west of where I live. That's where I went to college.
Mate, it sounds like you live like in the hub of America. This morning, you know the Forex guys, basketball players. You've got a NFL team there, mate. You got everything.
Well, I live right in the center
He's in
of
the
the country.
penthouse right now. Alex, just look out of his window in the back there. In the heart of it.
Yeah. It's convenient living in the heart of the country because it's not really that far for me to get to anywhere on the map, just looking at the map here. I mean, the farthest would be if I went to Maine, and that's like it's still a ways, probably 1,000 miles, I guess. But see, 1,000 miles here isn't really anything compared to a lot of the smaller countries overseas. Yeah, everything.
Yeah.
I mean, a plane ride, it's like a 3-hour plane ride.
Quite far. Yeah.
Maine, or I can go west to Vegas, it's 2 hours. I can go southeast to Miami, it's about 2.5 hours. Or DC is about 2.5 hours. Or I can go south to Dallas, it's like an hour and a half. Or north to Milwaukee, it'd probably take not even an hour. So I'm pretty convenient where I'm at.
If I go south, I just hit the Arctic. Like that's it. There's nothing below me. It's just
One of my favorite players actually is from New Zealand, though. Oh my gosh, I can't even think of his name.
What, basket?
Looks like Jason Momoa.
Yeah, I know who you're talking about. I know too. But helped Russell out on Russell Westbrook for a while, didn't he? He was his blocker.
Yeah, yeah, exactly. He plays for well, I forgot, but the dude he's a beast on the rebounds. Why can't I think of his name? He's from
Steven Adams.
Steven Adams, yeah, because he played for my Memphis Grizzlies for several years. I hated it when they got rid of him, when they traded him. It's like, no, not that guy. He was just awesome. Yeah, but that's a business for you. Richard, what are you looking at? You got anything interesting?
Yeah, I'm still looking at this German 40, so the DAX. Maybe we can switch over to my charts and
okay.
Easy.
squiz at it. Remember last week, when was this? I think it was around about here. Last week, Tuesday, Wednesday-ish. It looked like the German 40 or the DAX potentially completing a correction. Identify this area down here prior to price reaching it, got into there. It actually touched this low median line of this pitchfork. Again, assuming that we were dealing with some sort of a zigzag structure into there. What I do not like too much about this trade is that if this was a little C wave, it's a little bit short, right? That being said, this one kicked off here before this expanding triangle, also with a short one. Then a long one, maybe this is a long one and rotating into short. Anyways, price reached and touched that area, and we had a very strong bounce last week on Wednesday. And basically, I was saying that if price can reverse backwards, and I think it was Friday, price did start moving a little bit lower, but I don't want to get into this trade just because of my projection here. If I trade this, I would like to do something like this. Stop loss underneath the zone, take one stab out of it, and target the upside over here. Right, so that's actually the wrong one. Where's my long position? There we go. Something like this.
The big stop loss.
Yeah. So it's a good risk reward ratio of over 3R on this trade. But it will have to be a swing trade. It's on a 4-hour time frame, so I don't want to take this, going into a weekend. I said if it sets up during the next week, which is now this week, and it's early enough during the week, then I'll potentially take a stab at this. So I'm thinking about getting into this trade. And the other thing I want to mention here, if I'm wrong about this, because I'm still worried about how short this potential C wave is here, then we might still be moving lower in a C wave, maybe something like this. Then I'll be willing to take another stab at this lower down. If this is the case, then this will also be a nice trade if it obviously works out. Just simply because it's increases the risk reward ratio on this, or the reward ratio on it. So I'm probably going to take a stab at this pretty soon. This was also a fair value gap during the move lower. Just for that reason why I've got this green box. Maybe I should make it a different color. Let's do that. So we had a fair value gap as price moved into that lower median line. Also, that was 100% extension of that first drop lower. So we almost reached parity in range with that first wave lower, and on this range moved to the lower as well. So bounce higher. Maybe this was the first wave up, and that fair value gap was obviously broken as price bounced upwards, creating an inverse fair value gap, which is generally also a good area to get long. So I'll probably take a stab at this within the next, hopefully 5-10 minutes, and I'll just switch back to my charts, show you the entry, where I'm going to place the stop as well as the target. So that's pretty much all I'm looking for on the trading side of things for this morning. The other one of interest last week was the US dollar Japanese yen. Let's quickly move back to that one. And this has not set up yet. I'm still thinking that there is more upside potential on the dollar yen, potentially in the final leg of an expanding megaphone pattern. If that is the case, I would like price to get very close to this previous high that was set on the 3rd of September. Technically expanding triangles or megaphone patterns, they generally expand above or below the previous pivot points, which is done beautifully during this move. But on that last E wave, a lot of traders quite often, if they think they're dealing with a megaphone pattern, get suckered into thinking it will actually meet, for this case, this upward sloping trend line. And in some cases it doesn't, it just makes a double top and we start seeing a decline. So maybe just creating a zone rather than, trying to just get into a specific level. If price were to, let's say, get very close to 14913, again, I'll set an alert here. Add alert, crossing up. Then I would like to trade the dollar yen to the downside. Right, and that would look something potentially like this. Maybe I should get the right tools out here today. Stop loss above that area. Entry around close to where that zone is, targeting the bottom side. And this is also a very good risk reward ratio on there. So 4R on this if it does play out. So I've got that alert set. That is the plan, so everyone knows what it is I'm looking at. If it does trigger that alert, then probably going to start looking at getting into that. Really good risk reward ratio on there, so let's see. That's about it, guys. I mean, we all know gold is just doing its thing. It's just flying, flying, flying with little to no pullbacks. We did get some pullbacks, obviously, as of late, but I was hoping for slightly deeper ones. I still don't think that these little shallow and short-lived pullbacks represents a fourth wave. Again, tracking this sequence to the upside, I still think that gold is still heading higher in a third wave, and that at some stage we'll get that fourth wave and then that fifth wave higher. The reason being is that generally your second waves and your fourth waves, if you're dealing with such strong trends, and this obviously being very impulsive in nature, they will last, at least, they don't have to, but, the expectation is that they'll last at least, a bit longer than all of these little short pullbacks that we've had in duration. So maybe this was a pullback where that is the third wave. This was some sort of a running flat, which is a real crappy pattern to deal with because, and I say that because generally if you, let's say you have a bullish move and your most common correction is ABC, and then you get a continuation upwards. Now, how you label that would be A, B, and C. First drop lower, another move upwards, and then your C wave extends, in this case during an uptrend, below the end of your A wave, right? Now with running flats, that doesn't happen. Instead, you get something like this. It just makes it really impossible until it's like too late and after the fact, to call it that, because you only can say the correction's over when price then continues and breaks the area or the level where this pullback started from, or the correction started from. So that is a potential explanation of what happened here. But I don't know. I just think we're still heading higher. Quite often, and you've probably seen this many times over, especially Tiger, that these red warning lines quite often limit a very strong price move. And quite often you get very strong reversals at these verticals. Angular resistance and support lines, right? So you have your median line, center median line, lower median line, upper median line. And these warning lines are basically just almost like a standard deviation, right? Above and below the upper and lower median lines. So they do act as strong resistance or support during very strong trending moves. So it could be that price still wants to do that, reach that upper area over there, and then we see a decline. And if that is the case, unless price obviously blasts through there, but if it does reach there, starts, doing it sideways, sort of slower move to the downside, then maybe then we're busy with a fourth wave. And if that all plays out, then again, we'll try to track whatever correction we're dealing with, try to figure out where that correction might end, identify areas, and try to trade us back to the upside, assuming that we could get another move higher during this phase. All right. Obviously, trends aren't over till they're over, right? So trying to call a top or bottom can be very, costly. It's a big mistake that a lot of traders make. So the thing what I'm trying to say is I'm not trying to pick tops and bottoms here. I'm trying to figure out where gold is within this phase to the upside, and trying to identify opportunities and try to stick to the long side for as long as possible until, maybe you start getting one heck of a decline at some stage. Price is making this, let's say we move into there, we get a fourth wave, we get another wave higher, and then you start getting careful of being long. Because if price then reverses lower and we start breaking structure, high highs, high lows, high highs, high lows, then that's generally a good indication that that phase has indeed ended. Thus far, high highs, high lows, order of the day. Gold still flying upwards, all-time highs. So, yeah. And it can continue to do that for as long as it damn wants to. So be careful if you want to get short gold. And I know commodities are, especially gold, are well known for having very extensive fifth waves. And I'm still thinking this was some sort of a fourth wave correction in a larger degree, with this being some sort of a blow off fifth, and then at some later stage a much deeper correction, but still being bullish overall, right? But yeah, so that was my view on the dollar yen, gold, as well as the DAX, and that's pretty much it from my side, guys. I see we're also 3 minutes into when we were supposed to do the news, but all good. Maybe we can switch over to you, Tiger. Tiger will be bringing us the news, guys, in the chat there. Do stay tuned, and we'll be back shortly. And I'll probably also look at entering that DAX trade. So over to you, Tiger. Are you ready?
All right. There you go. Ready to run. All right, folks, welcome back to Forex Fire. Strap in, because we've got a lot to cover from yesterday's action and a look ahead to today. It was a classic case of central bank hangovers mixed with a dash of geopolitical spice, because what's a Monday without a little drama, right? Starting over in Europe, the euro pound cross was feeling the heat, weakening to near the 0.871 level. The pound sterling decided to flex a bit after the Bank of England played it cool and held rates steady at 4%. No surprises there, but they did reiterate that any future policy changes will be gradual and careful. Translation: they're not going to be reckless, which is more than I could say for my last attempt at assembling IKEA furniture. Adding fuel to the pound's fire, the UK retail sales came in better than expected, with core sales jumping 0.8% month over month. Meanwhile, the euro was looking a bit lonely, waiting for today's Eurozone consumer confidence data and tomorrow's PMI reports to possibly throw it a lifeline. Over in Asia, the Japanese yen hit a 2-week low, looking about as confident as a cat in a room full of rocking chairs. The Bank of Japan left rates unchanged again for the 5th straight meeting, though there were a couple of dissenters voting for a hike. The big story is the growing policy divergence. The Fed is signaling more cuts while the BOJ is, well, still thinking about it. Political uncertainty and those pesky U.S. tariffs are giving the Bank of Japan every reason to procrastinate like a student with a term paper due. We have got speeches from Fed officials later today, which could stir the pot for the USD JPY pair. And speaking of the Fed, the U.S. dollar has been on a bit of a recovery tour with the Dixie climbing near the 97.8 level. Last week's rate cut was dubbed a risk management cut by Chair Powell, who basically said, we're not in a hurry, but we'll keep an eye on things, like he does a lot. Classic Fed speak, keeping us all on our toes. Traders are now eyeing a slew of Fed speakers today, including Stephen Moran, who voted for a bigger cut. It's like waiting for the sequel to a movie. Everyone's hoping for more action. And just a reminder, Stephen Moran is the brand new Fed governor that was appointed by President Trump. He was definitely on the lowest end of the dot plot as far as cuts. So just something of note. Now let's talk about commodities because things got spicy. Oil prices. Well, they halted their losing streak with WTI climbing near the 62.90 level. Why is that? Geopolitical tensions decided to make a comeback. Russia launched more airstrikes near the Polish border, prompting NATO responses, and the EU proposed its 19th sanctions package against Russia. Meanwhile, several countries recognized the Palestinian state, which didn't sit well with Israel. It's like the world's most stressful game of Risk, and oil traders are taking notes. Gold, that shiny safe haven, it hit a fresh record high above the $3,700 level. Between the Fed's dovish signals and all the geopolitical mess, gold is looking prettier than ever. Silver joined the party as well, touching levels not seen since 2011. If precious metals were a band, they'd be selling out stadiums right now. Down under, the Australian dollar was under pressure, with the AUD-USD pair sliding near the 0.659 level. The Royal Bank of Australia Governor Bullock noted that the labor market is easing slightly, but the bank is staying vigilant, which is central bankers' code for we're watching you. The Kiwi dollar wasn't faring much better either, with the NZD-USD currency pair dipping below 0.5845 after a weak GDP data and a widening trade deficit. It's like both currencies drew the short straw this week. And elsewhere, the Euro-USD drifted lower to 1.173. The GBPUSD tested key support near the 1.345 level, and the USD-CAD climbed towards 1.38 as the greenback found some love. The Swiss franc pair, USD-CHF, the Swissy, edged higher ahead of the Swiss National Bank decision later this week. It's a full house, people. So what's on tap for today? Well, we're going to keep an eye on the Eurozone consumer confidence, plus a parade of Fed speakers. If yesterday was the warm-up, today could be the main event. And with that being said, just a quick note on the economic calendar. So, yeah, we had Governor Bullock speaking at 8 o'clock last night. I checked the market. Didn't really look like it moved a whole lot. But as far as the next red folder events, we basically have another Governor Bailey speech, I should say. And that'll be at 2 o'clock Eastern Standard Time, New York time today, along with a few other Fed governor speakers that's pretty much orange folder events. But I think everybody is probably going to be interested to hear what Miran says, because, again, that's the brand new governor that was just added, or nominated, I should say, by President Trump. So, and then other than that, the next red folder event is tomorrow. We got the flash PMI data for the services and the manufacturing for the British pound. And then later on in the day, we got the PMI data for the U.S. So, and then, Fed Chair Powell is going to have a speech around 12:30 Eastern Standard Time as well tomorrow afternoon, followed by Australia's monthly CPI indicators. So as far as the U.S. goes, yeah, we've got Tuesday's PMI data, and then obviously the weekly employment numbers, and that's about it. The GDP number as well. I'm sorry. Thursday is the GDP number at 8:30 New York time. So that's Thursday. So it's a lot lighter of a week compared to this time a week ago. So, yeah, hopefully we won't have too many hiccups and we can catch a trend and jump. So with that, that's about all I have for the moment. We'll get back into some charts. Back to you guys.
Awesome sauce. Thank you, Tiger.
Yeah.
Yes, thank you.
Entertaining as usual.
Appreciate it.
Yeah.
Yeah,
Yep.
so pretty
Yep.
light week on the cards for the US, that
Thankfully,
is, right?
I'm ready. I'm ready for
Yes.
Yeah,
GBP.
me too.
Yeah.
Into
Just
a
give us a
trade whilst the news was going on. If we want to quickly
let's
flick
see it.
to that back end. Sorry to interrupt
Yeah.
everyone again.
No worries.
Take
No
all
worries,
the
no
time you
worries.
need. We got 4 hours.
Literally
Morning,
in
James.
the space of the call, it's about to hit. So actually, it's the problem child. It's the problem child. We've had now a trade on all three of the pairs. So. I mean, this did exactly what we wanted. Although it originally broke out to the top, we did break out down here initially. Anything for me is considered that breakout. We came back up and we retested this line, which is the Asia session. This is the Asia session. So that's the VWAP for the Asia session through there. Yes, we kind of just poked our head just over the top of it, but I'll take it. And then from there, literally the next candle, not only did we break out of the range, but we also broke the solid line at the bottom. And yeah, that was it. We're in, and now all we've got to do is go down a tiny bit more for there. Well, so while that USO USD one goes on, we did hit our take profit for the Euro USD trade. So it did come up through here, messed around, did what we thought, and literally just nicked it. Just nicked the take profit right on the line there. Any amount of spread in any world, that's there. It's done. Unless, of course, you're on a futures market, but even then, it's probably taking it out regardless. So, yeah, it did well. Hit break even on the gold trade through here. As you can see, we already knew it was break even trade. That was before everything happened. So, and of course, it came up right near our take profit. Again, spread probably would have hit you with that. And yeah, again, if this is our take profit here, I'll probably wait till it gets a little bit closer. But I'm assuming if I go and check over at my trading platform, GUI
But
Trade,
you're already on break even on that, aren't you? Plus a few ticks in your favor on oil, right?
Yeah, exactly. So, well, it's just about to hit.
Cool.
Hopefully it does, and then we hop into there. So yeah, there we go. 2 winning trades and 1 break-even trade. So well, it's going crazy. I don't know if we're going to get any more. That's 3 within the space of the first hour. I don't know how much more action. Yeah, don't know how much more my little heart can take of that sort of stuff here. I'm pretty. I'm pretty swell.
That's what I was going to ask.
It wouldn't have been
do you? What's the most trades that you'll be okay opening at once like that?
Honestly, I'll probably be I'll have 3 open. If it comes in, I'll have 3 open. I'll do it. But much like what Coach Tony was saying this morning I know Samuel Trades was here this morning. You know, he tells me, he's like, if you're up and you've done what you need to do and you've come in, you've collected your scalp in the market, just walk away. So look, just for the sake of the rest of the stream, I'll definitely be looking at taking trades, but I will put this out there myself. I will technically be done now. If I've got 2 winning trades and a break-even trade, that's really good for me. That's a great day. I've taken what I need out of the market, and I go, thank you very much. Anything from here? And I've done it before, and this is just experience speaking. I get greedy. I get greedy. It's my downfall. And then I'll be like, all right, how many more trades can I hop into? What can happen here? So I'll monitor the market. If we hop into anything, I will have a look at it. But for the chat who are following along, I probably will not be hopping into anything else. So yeah, that is what scalping can be like occasionally. 1, 2, 3, and done.
And sometimes you wait and nothing happens, and you have to be really patient. But when it happens, you need to jump on without hesitation. And I think that's what a lot of traders get wrong, you know. And it only comes with experience. Guys, you're not always out of the gate going to get 3 trades. Maybe you do, Alex. Maybe you don't sometimes, right? So when they do arise, take them. And I 100% agree. If you were lucky enough to make 3 in a row, or 2 in a row, or 2 and 1 break even, you've done what you should do. You know, why go and risk all of that profit that you made on another trade again? So good stuff.
Exactly.
Nice, Alex.
Yeah, and thank you very much. And I think I'll add on to that for everyone there. I think this is the big thing. Like, you might see on Zoom, once I update and everything, maybe I'll be $200-ish up. And you go, $200. Like, that's pretty good. I mean, that's fantastic. That's absolutely fantastic. But remember that these small incremental things, because I think we come into Forex or futures or options trading or whatever it is, and we want to make the big bucks. We want to make the big bucks always. But remember, when you slowly incrementally build your account, because I restart each day as if I've just got that fresh account, a $10,000 account like we're talking about here, and seeing what's happening through there. Your account size is going to build and build and build and build. And then all of a sudden, the 1% that you're risking today is going to equate to what you were doing 2 years ago. And it would have been like 5% of your overall account. And the reason why I say that, guys, is these small incremental builds eventually over that longer period of time are just going to be so monumental. So even though you could say today, you go, 200, or Coach Tony with his like $150,000 account or whatever it is, it's got 1,000 up there. Just remember, it's all in relation to your account size. And if you slowly take these wins and you slowly build them up over time, you will reach that. Of course, it can be different if you start with a larger account or whatever it is, but just take it slow, build it slowly, take what you need, and eventually the market will do the rest, and so will proper risk management. So just keep that in mind when you are trading in the future. That's what I always say.
Yeah, I also find like with beginner traders taking on prop accounts, obviously risking too much per trade. So that usual 1% that they take per trade, we always hear 1%. 1% of your account equity. I find that's too high. I think it should be a quarter or 0.5%. Especially when you start off to potentially, build that buffer, have a longer term view of reaching your profit targets and gradually doing that rather, and building that consistency. You can always increase your lot size at a later stage, once you got that buffer. But a lot of prop trading firms on 3% on one day, you could, bend those rules or breach those rules and you're out. Very, very quickly. And three goes. You could just have a bad day. You could have had an awesome week. And on one Friday, risking 1% per trade, 3 trades goes against you and you're done. So, yeah.
Yeah. Yeah, I hear that a lot. I mean, I hear a lot of great traders say that, like, whether you lose 2 in a day or win 2 in a day, a lot of them just stop. Yeah, because you definitely don't want to overtrade, and you definitely don't want to revenge trade. So, that's kind of a common thing. So that's a good thing something good for everybody to kind of start with. And obviously you'll figure out your risk tolerance, but at least start off with something small and simple like that, so that you're not just overdoing it. Yeah,
100%.
Mm-hmm.
What's
exactly
what's up, Philo Wiz? Motivate everyone one. What's up?
Euro dollar. Yeah, euro dollar, and then we got to do pound New Zealand as well.
Alex? And I think Coach James was asking them, maybe look at that first. What was your trigger for the Swissy? Did you take a Swissy trade there?
I don't have a Swiss. I've got Euro USD, gold, and oil.
Yeah, Euro USD.
That's what I
That's
have.
Right.
Euro USD, gold, and oil. So yes, and then I'll be happy.
Yeah, maybe just for our viewers, Alex, just talk us through, let's say, the crude oil trade again. What it is you look at, if you don't mind.
Yeah, of course. Of course, absolutely. It moved so quickly, and people are always jumping in and jumping out. So, as we said before, This is just your opening range. 30 minutes, start of London session, first 30 minutes, right? And there's your high, there's your low, here's your range in the middle. Whilst it's in this area here, we do not hop in. But once it comes out of that area, that is when we're looking to hop in. So that's obviously the first one here. Now, if I'm going for sells, I already want it to break out to the bottom. That has to happen. If I want to go for buys, it already has to break out to the top. It can come back in the range. That's absolutely fine. And then what I really want from here, although this is definitely not the cleanest one. It's definitely not the cleanest one. I completely see that through here. But we have this VWAP. We use two of them. We use the Asia one, so the daily, and then we're using the London one, which is this red one. So you've got your daily VWAP through here, your London one through here. This is a retest. Again, not the greatest one in the entire world, but it's a retest nonetheless. And from here, we have that impulsive candlestick. We want an impulsive candlestick to not only break out of the range, but we also want it to break through essentially what a Bollinger Bands. It's just the highs and the lows of the market. When it ceases to be a solid blue line, like you can see over here, solid blue and solid blue, that is when we can hop in. And that's essentially just the trigger there, James, in a nutshell. Hopefully that's not too oversimplified. You can look at better entries over here. Like, this is a way better one.
Am I right from what you said previously? You don't take at first breakout. You want it to pull back, right?
Yes, exactly right.
Well,
like
a lot of
here.
All traders, I think, make huge mistakes. They obviously just jump in when the range gets broken out. And then you sit with that reversion back into it.
Yes.
Yeah. Okay.
Yes, exactly right. Yeah, you don't. The fake outs are just going to be a thing. Especially when you've built a range. Like, this is a man-made range here, which it will like to hang around in. Like, it doesn't really. Well, it does matter the pair, but especially these three pairs, they love to hang around in them. Absolutely love to hang around in them, especially the first 45 minutes. Really, really like to do it. So you can see it from here, from 5 all the way up to 6. That's when it's hanging in this area the entire time. So I'm not interested in really anything that's happening until it already starts to show me some sort of bias. It's probing up here, I'm going, yes, great, but that's not enough. I need that impulsiveness. I need it to break out of the range. I also need it to break these highs here, respect a VWAP, so I'm getting some sort of support or resistance that it's pushing off of. I'm getting that impulse off of the push, and I'm also getting, I guess, a really solid breakout, which these don't, because we literally have the blue line solid the entirety of the way through. I don't have the volume. I don't have the impulsive nature to be able to do that. So I'm not interested in those initial ones. And I do agree with Coach Richard, obviously biased, because this is what it is for me. I'm not interested in the initial breakouts. If I'd done that here, absolutely would have lost. We know we put my stop losses at the last market structure. So if that was my low, for example, I'm gone. Even though it broke out underneath, it retested this London one through here, did everything that I wanted. In fact, a cleaner retest, if anything. Yeah, it would have lost, because I'm not interested until it's shown me initially where it wants to go. And in my experience, first one, sometimes even 2 moves are just fake outs. It's collecting liquidity until it wants to push. And yeah, that's it. That's what I do. The
market maker's been watching all those orb YouTube strategies.
Exactly right. Exactly right.
Be patient, but
exactly. Well, I mean, that's it for me. I think. I mean, you're in the position now, aren't you, Richard? Since the news.
Yeah, I just got into a trade. Actually, just after the news. So you guys can switch to my screen. I'll quickly show you the position. So, as I mentioned, I was going to get long at that fair value gap. I can just quickly switch between my charts here. So my analysis chart here, price back into that fair value gap. It already sort of like moved 50% into that fair value gap. Again, was a bearish fair value gap that form prior to price touching down into that area identified last week, right? We had a strong push up, and I was thinking ideal area for me personally would be a retest of that fair value gap. Now that this time turned into an inverse fair value gap. Right, fair value gaps can occur all over the show. They do make really good, how can I say, trade entry locations. But, you know, because they also can occur all over the show, it's really important that they occur at certain areas rather than makes them a bit more stronger than the others, right, or a bit more useful. In my case, right into a low at an area of interest and with immediate reversal, you know, fair value gap, break of fair value gap, strong candle back upwards. I think this is a really good area to get long. So price did pull into it. Again, I'm just shooting back for the top of this range that price has been in, or again, or not a range, assuming that this was some sort of a correction. Long 0.2 lots, stop loss around about 23,148 again, depending on which broker you're looking at. And again, targeting the upside of that range. This is on a 4-hour time frame, so I'm willing to hold this for, hopefully it doesn't take too long, and maybe a few days or so. Also got to keep an eye on the news. If anything, you know, pops up that it might affect the DAX, then I might have to get out. So who was it last week that actually took that German 30 trade with me? Was it Samuel? He actually managed to get in right down here after we identified that zone, had a nice pump upwards, and actually took some good profit within, I think, a day. So hopefully this is just some sort of a pullback, and we'll see a resumption upwards again. If not, then I'm willing to wait for the next area, which is way lower than prices currently, for a potential another trade upwards. And if that does set up, that will even increase the reward rate even more. All right, so let's see how it goes. I'm in there again, long German 40 or 30, whatever you want to call it these days. Apparently it was a German 30. Yeah. It's now called the German 40. They added 10 new stocks to it, or companies,
oh, wow.
Otherwise known as the DAX. Yeah.
The DAX.
All right. So, yeah, I just wanted to show you the position there, and hopefully you're going to see if I can get into some day trades. But they've been a little bit scarce on my side. Last week, I had a misfortune of actually waiting for my gold setups right towards the end of these sessions, and they actually all worked out. But yeah, slim pickings thus far. Let's hope this week, especially with the reduced red folder events, can yield some more day trades for us to take. But as always, as coaches, we'll try our best. Guys, we just want to catch up here on the chat quickly. We got loads of people in the chat. That's fantastic to see. Hamza, Mary, what's up? What's up? Joseph.
Hello.
Giannis, guys, want to hear a joke? Yeah, Giannis, tell us a joke. That'll be, as long as it's above board. That will be pretty cool. You don't mind? And by the way, guys, I believe this week we are still going to continue with our $5,000 giveaways on the Forex side of things. That's for a $5,000 challenge account. Again, we would like to give one away today, but it really depends on who follows the following steps. It will probably jump onto your screen there very soon. So to be in order to win one of those prizes, please keep on commenting during these sessions in the chat box there. Just take a note, if you won previously, you won't win again. So we try to pick names based on who hasn't won before. And obviously there's the other steps also really important to take to be in line to take this or to win this prize. Subscribe to our YouTube and Instagram handles. And that's for both our Hola Prime TV and Hola Prime Global accounts. And guys, make sure that your email's in your YouTube bio, right? So that's linked up so we can actually contact you, reach out to you with that account details to get you set up. So if you follow those steps, you haven't won previously, then who knows, maybe today will be your lucky day and you could win a $5,000 Forex Challenge account. Again, we've been giving them away like hotcakes on a daily basis, and we'll continue to do so for the foreseeable future, I believe. But again, if you haven't one of these accounts yet, a lot of these traders actually, or the guys in the chat, have one before. So I believe they'll be testament of how easy it actually is. As long as you go and just follow those steps, you'll be in line for the next prize. All right, all winners, as always, will be announced live. And we generally do that around about 6 a.m. Central. So do stay tuned, guys. We'll let you know if we decided on a name and when we'll actually release that name a little bit later. So keep those comments coming in, like and subscribe, share this channel with all like-minded traders, friends and families, or whoever you think might enjoy it. We'll really, really appreciate it. Cool. So yeah, that's it, guys. I'm long here. I'll be looking for some day trades in between, and maybe we can switch to you, Tiger. What are you looking at today?
Yeah.
Also, on the cards.
Yeah, I got a very small amount so far today. So, look at that. I've got a grand total of 9 alerts. That's all I got right now. So after the interest rate decision and the good U.S. reports came out last week, it kind of turned everything on its head somewhat as far as fundamental and sentiment point of view. So, yeah, at the moment, kind of slim picking. So I'm right there with you, Richard. Don't really have a ton yet, so I'll be doing kind of the similar thing, just taking a look at some 5 and 15-minute supply and demand zones, and might even look at some counter trend action if I have momentum going against some of these alerts. So we'll take a look, but just turning my goodies back on here, taking a quick peek. As always, I do this on the Sunday night, the Sunday market prep show, and then I always do this on Mondays. But yeah, we'll just go through the COT report first. So what did the big banks and institutions and hedge funds do last week? Well, in short, they loaded up on Nikkei. They increased their net long percentage 13%. So that's quite the number. That is quite a big number. I believe the Nikkei is now the second most long. They're the second most long on the Nikkei. Obviously, gold is still at the tippy top. Let's start with that actually real quick. Just look at the longer term positioning. So gold, still the most net long asset as far as all the ones I track. Nikkei has moved into second. So silver was in second place, but Nikkei's kind of booted it to third at the moment. Currencies, still long, net long on the safe haven yen, net long on the euro. Euro actually is leading right now at just a little over 60%, about 65% net long. So, and then as far as what are they net short on the most? Canada dollar and the Swissy. Right, Swissy and both of those currencies, actually all three of those, New Zealand dollar, they're all some of the most underperforming assets when it comes to the surprise meter. Right, are they beating expectations? Are they missing expectations? So this is more so for the longer term position traders. Right, they really like this report. Now again, it's just like the weekly report I use. It's not the end all be all, but it's just a good idea to see what side of the spectrum the big money's on, right? Are they net long or are they net short? So it's just kind of a good barometer to look at if you need to have a piece, get some more confirmation as to whether or not you want to buy or sell something. So, but yeah, that's kind of the overall positioning. And when we look at the week to week changes, like I said, they increased the Nikkei by 13%, but they added to their shorts on all 4 U.S. indices. So the Dow at the very bottom, look at that. That's ugly, minus 16%. So that's a 16% increase on shorts. Okay, they got rid of 3,500 long positions, and then they added 4,100 short positions. So when you look at the overall positioning, just as an example, right, they're net short, but they're long 7,100 contracts, but they're short 16,000. So net short percentage of 69%. Then you go up to the Russell, they're net short 72%. Okay, they increased their shorts by 4%. S&P is right above it. They increased by 3%, and they're 66% net short. And then the NASDAQ, for which they are still net long at 55%, they increased their shorts by 3% as well. So that's just in very simple terms, they sold, right? They sold the markets, the U.S. markets. And as far as Bitcoin goes, about a 0.5% increase, nothing too substantial on that. I do believe the Bitcoin to gold ratio is kind of turning around to the long side. So we'll take a look at the Bitcoin to gold ratio chart here in just a second. But silver minus 1.5%, gold plus 0.6%. So nothing too substantive on that front. But yeah, I mean, as far as how that
looked at that Bitcoin gold ratio as well, quite often.
Oh yeah,
It's quite interesting.
oh okay, yeah. It's just a really cool way if you just want like a 30,000 foot view of, hey, are we in a risk on atmosphere or are we in a risk off atmosphere? Right? You can just simply go on and type in BTC/USD /XAU USD. Okay, just put it on a daily time frame, and okay. Well, you know what? Actually, it changed since I looked at it last night. Yeah, so last night price was up here. It looked like it was trying to curl around, but it's flipped again. So risk off, right? When you have this uptrend like this, that's risk on, because Bitcoin is appreciating more so than gold. It's not the end all be all. It's
Wax
just
on,
one barometer. Wax on, wax off. And then, when you have it trending down, then that's obviously more risk off. So risk on, risk off, risk on, risk off, wax on, wax off, wax. Okay, you get the picture. So yeah, I mean, it's just been a little more wax off, for the last couple of weeks, right? Kind of breaking this trend line, and just kind of heading down. And big ugly red candle today. So again, it's not the end all be all. I say that I want to always repeat that, right? I don't place a trade on any one report or any one ratio or the put to call ratio. It's just one piece. So the crazy thing though, if I go back to gold and silver real quick. So
how many coffees you had this morning, Tiger?
Coffees? Oh, I don't drink coffee. It knocked me out.
Yeah. You just got this much energy naturally.
Naturally,
yeah, pretty much. I get excited about talking this kind of stuff. No, coffee, if I drink a cup of coffee, like, it'll wake me up for about half an hour, but then it just, like, it's too much for me. It just makes me kind of crash out. So I just take a caffeine tablet and I'm good. Which is the same thing as a cup of coffee. Pure caffeine.
Yeah.
So gold's put to call ratio. So this is just kind of showing you the how the market is treating this. So they're basically in extreme fear, meaning high put demand, meaning bearish bets. So this is just another form of a contrarian signal, right? I tell people, as far as looking at this chart, here, let me minimize it just a hair. Just think of it. Oh, there's our hat. Remember that, Richard? The parachute pants we were looking at on Friday.
Friday's parachute kids.
Yeah, I forgot I left that there. But kind of an easy way to look at this put to call ratio, if the bars are going up, then that might be a good idea to stay on the long side instead of the short side. The same would be true in reverse if it goes under the extreme greed, right? That'd be a high call demand. So this is options, right? These are the options traders, right? This is their puts and calls. So again, if it's above this line, they're obviously, net short this thing. So, but yeah, it's way up there, but not near as up there as silver. Silver is just going freaking parabolic. Look at that. I mean, it's way the hell up here. Alex, what did I say last night? That's like double the legal limit they're spending a couple days.
Yeah, you're like it's 101%. Yeah.
So, if this is just one piece of information that people look at, that the banks look at, if they see this many bearish bets, well, they're probably going to keep the bullish pressure on until they reverse this. So yeah, I mean, silver still at the moment, it's not on my bullish list, but gold is. Gold's been on there for like 3 months now. Okay, so that's COT. And then, yeah, just looking at the dollar, definitely want to go over the dollar real quick. So just as a recap of last week, any report you see in yellow as far as the date, that's within the last 7 calendar days. So we had obviously a bullish retail sales number come out three times better than forecasted, right? 0.6 to 0.2. So that's obviously bullish for the dollar, bullish for the stock market. And then also a couple of days later, we had the jobless claims come in which was a nice, healthy number. That was after the week before having the really ugly 264,000 jobless claim number. I think it was like a 230,000 forecast or something like that. So real ugly, but we kind of had a rebound to 231,000. So it was 9,000 less. So that was a bullish report. And that was the first bullish piece of news that we had in the jobs sector in quite a while. So that's why the jobs is now getting a very tiny 25%. It's at least got a score now, right? Inflation still in the cellar at 0%. And the growth numbers that we've been getting here in the U.S. haven't been that bad, honestly, when it comes to the sales and those other metrics. So we are up to a 44%. I do believe we were down at like 22% last just before this retail sales number came out. So yeah, I mean, it's not as bad as it was thanks to that jobs info. So still not necessarily super bullish, still not necessarily super bearish. I do have a couple of US dollar currency pairs on my watch list, which I'll go over here in just a moment. But yeah, in the short term, we could potentially see a little bit of a spike in the dollar. I mean, I don't know. I haven't even seen it today. See where we're at. Okay, so here we go. So yeah, I mean, we had a few good days. Kind of retracing a little bit now, but yeah, it's not all doom and gloom. Dollar ain't going to hell like a lot of people say. Coach Richard did a brilliant job of kind of going over that a couple different times last week. So, but yeah, going back over here to my goodies. Yeah, when all is said and done, I mean,
goodies.
The goodies. Yeah, just looking at the 8 major currencies. So we see the dollar again. That's 44%.
Before you do that, can I use a really good question here in the chat for you? I think you'll be perfectly apt to answer that. Now my chat box disappeared. Okay, let me just quickly find it. I just want to get to these questions before they run away.
Oh, yeah.
Yeah, there are a lot. And thank you for all the kind comments, everyone. Really appreciate it.
Yeah, thanks, guys. I think it was from Joseph, right?
Yeah.
Oh, yeah, here we go. Joseph Wolonsu asked, coaches, I would like to ask for a better risk management, I suppose, technique. How many pips should you consider for your stop loss?
Yeah.
That's the question. Yeah.
It's a great question. Great question. I mean, part of that can be answered with just the percentage that you're risking to begin with, right? I mean, ideally, you want to kind of give yourself a little bit of wiggle room, right? Now, I used to be really bad about just doing like 2 or 3 pips underneath in my case, on the opposite end of my supply and demand zones. But I was smothering my trade because, early on, I had a lot of trades where I'd get tapped out. It'd go maybe a few more pips through and then go in the direction I wanted it to go in to begin with. So, and it's going to be different for everybody, but, depending on the time frame you're on, 5, 10 pips, right? And you can also build that into your risk. I mean, it's always good to start off your risk. Well, I always say whatever the lowest amount is your broker will allow, right? Just so that you can kind of get used to winning money, right? Even if it's just a few bucks at a time. But you definitely want to give yourself wiggle room because, yeah, you could pick great places to get in, but markets tend to breathe, right? Markets like to go for liquidity. So, as long as you're not smothering it 1 or 2 pips, 5 to 10 pips, I don't know. That's probably the easy answer for me. 5 to 10 pips. And again, it depends if you're, 5 to 10 pips is different on, let's say, the dollar yen, which moves in an ATR of 120 pips in a day on average, versus the euro pound, which is the one that's currently on Coach Michael's hit list, as he calls it. It only moves 40 pips a day. So it moves a third of the range of the dollar yen. So, something like a dollar yen, you might do something like 10 pips, 10, 12 pips. Something like the euro pound, maybe just a handful of pips, 3, 4 pips or something like that. But that's why it's always good to have the ATR gauge.
Giving yourself wiggle room is really important, but it's also defined by a strategy. You always know exactly where you want to place your stop before you get into the trade. And obviously, depending on the distance away from your entry, then you got to go figure out the lot size or position sizing, so you only risk a certain amount of your account, right? So if you probably know all of this already, right? So it's not just about using a set distance. It's with Forex, at least CFDs, your stop loss or wherever you want to, but it's always the most important thing to know how much you're going to risk if that stop loss gets hit. So you go on further to say, so if it takes you out and then goes in the intended direction, then if it does take you out, that shouldn't be such a big loss that it actually worries you. It should be a small fraction of your account. And what's wrong with getting back in again? Because there are going to be many times that you're going to get stopped out and then price reverses and moves in the intended direction again. But you should be able to afford to do that again the second time around, right? Not wrong trying to get into a specific setup or direction multiple times, as long as obviously you don't risk too much on the first one so that it hurts. And now you're going to get angry. You want to start revenge trading, increase your lot size, all those sort of nasty stuff. And then you end up on your second trade, taking a bigger loss. And that's typically where a lot of traders go wrong. So, yeah, sorry, I just wanted to chime in there too, Tiger.
Yeah. No, that's, I mean, at the end of the day, if you put a trade on and your gut's burning, right? The funny thing about our gut is it knows when we've done something too much or too risky or too crazy. I mean, it's going to take you a while, especially brand newer traders, to kind of develop that sense or that sixth sense or whatever you want to call it. But, oh, yeah, the minute I get into a trade, if there's one little thing off, I can feel it. Like, I don't know about you. Like, okay, I know I should have probably waited on this, or I should have risked a little bit less on that, or maybe I should have added a little more of a stop loss. That'll come with experience. But yeah, the important thing is just don't over risk it, and just definitely give us some breathing room, because you can still be right. Give us some breathing room and go through your zone in reverse, right? The stop losses a lot of times will save you. Like I said, I used to keep them way too tight, and then I don't know how many trades I lost in the past where tap a stop loss, went a couple pips lower, then went the direction, and that's maddening when it ends up going in your favor. So, just give her a little.
That's right, Joseph. So your takeaways: give it enough space to breathe. I believe even with Alex, you've probably seen that trades you took earlier. Although he's scalping, he gave it some, wiggle room, price action. The one thing you don't want to do is like risk 1 or 2 pips and always have, like some traders would like enter with a specific strategy where they use bracket orders, where they have a set stop loss distance away from the entry and a set target. I think you need to be a bit more dynamic than that. So you want to know where's a recent pivot, where price switch, turn around from. Give it some space. You don't want to be constantly taken out by the volatility and end up losing like 2-3% in a very short period of time. Get into one trade, give it some space, and you'll probably, if you do give it space, you'll get a really good understanding whether that trade is actually going to work out or not, pretty soon, obviously, depending on your trading style. If you want to be a scalper or swing trader, whatever the case might be. So, yeah.
Mm-hmm.
Yep. Yeah, you're exactly right, Joseph. Let it breathe, but know what you are able to lose. Look, that's the first thing I look at. I don't even pay attention to profit target until I look at my stop loss. Hey, assuming I lose this trade, how much am I going to lose? What are the potential roadblocks in front of me? So, yeah, as far as the take profit, I'm always looking to see what opposite zone is potentially going to push price against me, right? So for me,
Right.
I just like to make sure that those zones are far enough away to where I can take a decent profit. So different risk reward. Now I'm on the higher time frames. Typically, you'll see Coach Alex do a lot smaller RRs, right? So it's just a little bit different. But depending on the time frames you're on, you just got to take what I think you said it perfect the other day, Alex. Take what the market gives you on the smaller time frames. But just always being ahead of, if you're in a buy, just always being ahead of the overhead resistance or the overhead supply zone in my case, right? Hey, where's potential unfilled orders or liquidity going to potentially flip trade the trade against me, and just kind of go from there as far as the take profit. But yeah, that's the first thing I do. Hey, how much will I lose if I lose this trade? And I know I'm going to lose trades because I have about a 40% win rate, right? Which is, I think, about a normal number when it comes to 3-to-1s and 4-to-1s like I shoot for. Right? I'll lose a few more trades, but I'm also getting a lot more.
We say this many times over and over, Joseph, as well. It's like if you're nervous about that trade, that you're actually sitting there sweating because it's not going your way, or maybe it is going your way, and you start seeing green now finally, and the profit's rolling in, and now you want to start messing with your stop loss or whatever the case might be. Then you're probably trading with a position size that's too large in the first place. You should never feel, I believe, it's fine being a little bit nervous, maybe you're completely newbie or whatever the case might be, but it should never be, the end of your day, or be that annoyed or stressed out just because you're trading, right? Then you're probably trading with a position sizing that's too large, right? So
Absolutely.
keep it small,
Absolutely.
gradually grow it. Remember that compound growth over a long period of time can become very, very powerful, for sure.
Yeah, absolutely. I think to expand on that, Mark Douglas and Tom Hoggard, so Trading the Zone and Best Loser Wins, obviously 2 books that I brought up before. But both these guys, giants in psychology, amazing. Well, at least one's an amazing trader. Tom had a Telegram group where he would go live and take $500,000 trades, etc. And obviously, we know everything about trading in the zone in terms of psychology through there. But they both talk about, in a separate way, accepting the risk. In order to be a trader, you have to learn to accept your risk. As Coach Richard was just saying, they're far newbies. If you're in that trade and you are freaking out, you are trading with too much money. And it's not a sign of weakness to be like, oh, I have to go down. The only way you're ever going to go up and feel comfortable is by first being in a position where you are comfortable losing that money, where it is okay. If you've got $100 on the line and you only have $500 to your name, you're going to be freaking out about that trade. But if you've only got $2 on the line and you've got $500 in your account, I guarantee you'll trade better. Now, to finish with this, there is a fine line. You don't want to be going under. This is not for every single trader, but you don't want it to be so low that you just flip into about it and you don't care, because that also happens. You can just be like, oh, well, I've got $500 in my account. I'm only going to risk 50 cents. It doesn't matter if I lose or win. Yeah. No, you need to be risking an amount that's comfortable. Yeah, exactly right. That space between comfortable and uncomfortable, more on that comfortable line, if that makes sense. But you've got to accept the risk. Now, most people are going to be already pushing too much. That's why I talk about this. I rarely come across a trader that's under risking. Very rarely. So I'll probably say for most of you, just scale it back, and you will trade so much better for sure.
With less stress. Yeah, for sure. Yeah, my Forex coach, when I went to the academy, said just start off, again, whatever your broker allows for a minimum, whether it's 1,000 micro lots or whatever the case is, right? Or 100,000 micro lots, whatever the case is. Just do that for at least 10 trades, and then, just start graduating up. Just start increasing a little bit. Another 10 trades, increase it, after every increment of 10 trades, right? And that's because he basically said, whenever you get bored making money, that's when you know to increase, right? But you got to make those little amounts. You got to make those little amounts first, and not try to earn it all in a month or two. So yeah, just just try to let that be a compass. I think that'll help you out a lot. And then the trades start to get fun because you're not stressing every 5 seconds. Because I used to risk horrible amounts. I'll be honest with all you guys. Back before they had the way they calculate them now on the order ticket, they didn't have that back when I started. So, I just did a horrible job. I would just be like, half a lot sounds good. 0.25 lot sounds good. A lot sounds good on that.
Back in the 50s, Tiger, did they?
The 50s? Cut it out. What are you talking about? It's actually not that here.
Things have changed drastically. I think things change drastically yearly.
Absolutely.
No, it's come a long way. It's amazing how far everything's come. But no, it's just getting easier and easier. I'm jealous. I wish we had some of these tools back when we started. It's okay. But after all the data shook out last week, I think, Samuel, you were asking me about pound New Zealand. Yeah, it's the strongest bullish signal I'm getting. I mean, it's got really good scores on so the big banks favored the pound over the New Zealand. The retail traders are net short, which is a contrarian signal to buy. You got a good seasonality score, trend, GP, a lot of the data. I mean, I'm getting a +7 out of just the fundamental analysis alone, save the unemployment rate numbers. So, pound New Zealand, Aussie New Zealand, that's my two strongest scores, and then Aussie yen and pound yen right behind it at a +8. So, and then on the bullish side, not really getting a whole lot of strong bearish scores. I just got a -5 on the one that's on Michael's hit list, which we'll be able to talk about tomorrow when he comes in, and then the CAD Swiss. So not really a whole lot. Like I said, it's pretty well slim pickings for me at the moment. But having said pound New Zealand.
Did you go through crude oil there, Tiger? Because last week it was sort of neutral. Did it actually get a bit weaker there?
Let me see. I think it was. I know it was still neutral, but let me look. Neutral +1. So you got good sentiment score at a +3, but you got not so great technical at -3, and then eco is a 1. So pretty much right down the middle. I do have an alert on it though, which I'll get to here in just a moment. Actually, I can just take a look at it now while I'm over here. But let's see here, daily 4-hour. So on a 4-hour time frame, I got a beautiful demand zone down here. Really just super nice, really nice gap coming out of it. About the only knock I have on this is we did not break a structure for quite a while. So that's a little bit of a knock. I really wish that this would have been a break of structure right here and closed up here on this wick, but you can see it just got slammed down, which Friday the 12th, off the top of my head, I can't remember what report that was, but it just slammed it down, but it did end up recovering. So, September 12th.
Slam dunk.
What was that report? Yeah, September 12th was consumer sentiment. The University of Michigan sentiment. Is that what caused that? I don't know.
Yeah.
Okay.
I wouldn't say it caused it, did it?
Yeah, but that's about the same time it happened. Yeah. 10 a.m., 9 a.m. Okay. But nevertheless, you look at this thing on a 1 hour, and that's just about as strong as it gets. Again, I wished it would have broken this high, this break of structure, but it didn't. So, I've got this alert down here. I'm not going to be interested necessarily in putting a full position on just because it didn't break that structure right away. It took quite a while to do it. It took a couple more days, or a few more days. But it did. It did break it. So, yeah, I'm for a simple retracement here. Just give me a simple retracement. I'd like to see it around sideways for a little bit, just to show that the momentum is slowing down. And then obviously maybe develop some liquidity underneath from stop losses from the traders that are buying down here in this area. So I don't know that if it just drops straight in, I don't think
it's going for this lows.
But yeah, looking at it on the opposite end as a sell. Yeah, let me look at that for a second. 1 hour. Let's go start with a 4 real quick. No, I don't like a 4 hour. I mean, 2 hour gives a pretty big zone. 15, 10. Yeah, I mean, if you wanted to be real conservative on a sell, you wait for this little zone up here on a 10-minute. Not a very popular time frame, but that is a supply. I might even look better on the 5 minutes. Yeah. I mean, you got a 5-minute supply up here, so that might not be a bad place because if you look at the trend, it's currently down. If you look at the last week of price action, and it has not yet reached that strong demand zone, so I'd be okay with taking a short on this thing. Yeah, just take a short up here. Now, this would be a lot stronger to me if price comes down and breaks these lows first. So come down, close down here, and then come up for a short. That's ultimately probably would be my favorite play if it does that. Got this ugly wick over here, obviously from Friday, but yeah, if I could see a close below that and then a retracement, I think that'd be about the best spot because it's the origin of that strong down move, and it's got a nice gap. I mean, got a nice fair value gap or acceleration gap coming out of that. So that's a pretty strong little spot right there. I'm gonna color my gap white just to kind of distinguish it, just showing the strength there. But yeah, gold. I want to get to Samuel because he'll get mad at me if I don't say anything about pound New Zealand. He asked about an hour ago. So yeah, plus 13. Fundamentally,
I'm glad you remember actually, Tiger. I forgot.
The higher time. As far as a higher time frame, Samuel, this is my favorite one. I mean, we got nice little 1 hour demand all the way down here. So there's a couple of plays on this. We got a larger time frame and a smaller time frame, which I'll get to. I need some things to work on the larger time or the smaller time frame, but just starting from a 4 hour. Yeah, we got this 4 hour zone here. Nice gap up. Go down to the 1 hour. Got this zone inside, so it's showing me confluence with its own gap from candle to the second candle. So that's going to be this lower play, which I have an alert set for. That's going to be my favorite play. This zone was strong enough to break a few different high points. A nice break of structure. This high point with a strong close. I mean, this is called momentum, right? So look at this price action. So this technically is the origin of the move down here, but it was resulted from bouncing into a demand zone to the left. So it kind of went up, kind of lazy, and then all of a sudden, bam, we had some huge expanded range candles. That's a strong move. So that means that there's something important in that zone. And then when you get the retracement, okay, it's falling way slower than it rose. So that's showing that even though the sellers are temporarily in control, they don't really have the momentum like the buyers did, right? Because that was 2 candles or 3 candles. I guess you got a doji in there. So that's 12 hours of price action to this, 48, 60 hours or whatever that is. So yeah, that's a lack of momentum. This is a heavy momentum. So on this one, yeah, just give me a simple retracement. I mean, that's to me a high probability zone. Now, and all this market action is pretty efficient throughout here. You technically have a demand down here with a gap, but again, the momentum was just too slow. So I care about the high momentum play. So looking at pound New Zealand, yeah, this is the higher time frame play, and it's in alignment with the plus 13 fundamental and sentiment analysis bias. Now, if we want to get a little edgy and look at this thing on a smaller time frame, well, we technically have this demand zone right here. It's kind of small, but the reason I haven't drawn it up yet, the reason I didn't draw it up earlier is because similar to one or two of these other ones I've already talked about. If that is to be a strong demand zone, I need it to break this overhead supply zone and close up here to show strength before returning down for a buy to the long side. Now, it did break this little double top, but I feel like I just want to see a little more strength. If it's strong enough to go through that really strong momentum down move, then I've got a lot more confidence in that, fairly small range to maybe even put a full trade on this thing. If it doesn't, then I'd be limping in. I'd be making sure it's going to give me a bullish engulfing candle or a wick underneath. I need to see 3x, 4x, 5x, the volume spread analysis candle underneath to show that institutions are stepping in. I just don't feel as confident with that. So I would definitely be, so that I don't have that pain in my gut, I would definitely be probably decreasing my risk on this by like 2/3. Just limp in. But if we get a retracement down here, yeah, I'll be happy to put a full risk on this area. And then just ride it up to the top there. So this one I'm going to, just kind of put a little caution color on there, right? Caution on this one, even if it breaks and closes. But down here, oh yeah, sell the farm, baby. Sell the farm. So yeah, that'll be Samuel 2.285. So you got a nice psychological level right in there. And I don't want to buy on the 4 hour because it's too huge of a range, right? You're looking at about 80 pips. I want something a little more manageable. 20 pips, 30 pips. That's 85 pips from the proximal line all the way to the distal line. But this is a little more manageable down here. That's 20 pips plus the benefit to where it's located. I would incorporate the 4 hour as far as the stop loss. So you could comfortably put that down here at the, about 2.2809. It's about a 37 pip range. That's ideal. I like 30 to 40 pip range zones when I'm talking like 1 hour demand zone or supply zone, or 4 hour demand and supply. Well, 4 hours are usually a little bigger, but 1 hour, 35, 40 pips, that's like ideal. That's perfect for me, for the way I like to do it, right? So I would just essentially be obviously putting my stop loss down here, color that sucker red. Just be looking something about like that. So that'd be about a 10 pip stop loss, right? But no, I like almost everything about it. If I had to nitpick on one little thing on this zone, we didn't really get the greatest volume. Okay. But I look at a whole bunch of different things. I look at the fact that the RSI is pretty close to the bottom. Okay. It's under the 50% line. That means it was not quite there, but it was pretty close to oversold at one point when it was formed before taking off. But the momentum is the best part about this leg. Because again, this took on a 1 hour time frame, it took 10 bars. So it took 10 hours to make that move right there. and then on this other move over here, I mean, it's just taking it's a hell of a lot longer, and it's not even close to this move, the strength of this move. So as long as that can continue down at that angle, I like that. So that is top trade idea right there. Or what is it Michael says? Trade of the day or trade of the week?
Trade of the week.
That'd be the same. Trade of the week. Yeah. I hope that helps.
All right.
Samuel? Yeah.
Cool. I guess on an unrelated note, did you guys, because I know we were talking about it last week, did you catch the futures coaches going head-to-head, either of you?
Part of
yeah. I had to go to a quiz night on Friday, so I caught like half an hour of it. Yeah.
Yeah, I was.
It's pretty insane.
Yeah, about the time, because that was. Yeah, I usually go to sleep right at the start of their show. But I think when I went to sleep, I think Sam was leading at one point. Did you see how it finished?
Well, I got to talk to Tony this morning, so I was just like, I do the exact same thing. I go to bed when they start. It's like midnight for me, so yeah. I am not up. But yeah, Tony won it in the last 3 minutes. He won it with his very last trade. He was in for a sell. Just went, screw it. I'll reverse this position. Press the reverse position button. And it went up and up and up, and then he took over, and he went from like second to last place or something, or last place, and he won it in the last 3 minutes. So
man.
he was.
Who was
did it. I was like, damn. What's that?
He needed the whole 5 hours.
Who was that runner?
Yeah.
That's so awesome. Yeah, I don't know. I left about. I stayed up 2 hours.
I don't know who came second. I think it was Sam that came second. I think off the top of my head it was Sam.
Yeah, he was in first when I went to bed. He had to step away for Hola Prime related task. I'm like, he's just gonna coast on his lead. He's in the lead. He's like, I'm gonna take him.
It was. They apparently they kept on having to say, don't follow these trades. Don't follow these trades. This is you should not be doing this, because obviously they were just putting the house on it. I think Tony at the end had like 15 contracts. That's what he was putting on. Like he maxed out like the last trade. So he's put it on his direct account. He's up like, I don't know, $5,000 or $6,000. But because of the consistency rule, and this is actually a good thing for everyone watching who has an account, the consistency rule, he has to make $15,000 in order to access any of his payouts. So another good reason why you watching here should not go crazy with your risk management, because even if you do make money, you're going to have to make even more money to get anything out. And the consistency rule is very good. I respect it massively, because it's going to stop you from gambling.
When I also understand, though, there's a big difference between gambling and what the futures coaches were doing, right? It was a straight-on, very competitive competition, although a lot of fun. So, yeah, I mean, they can sort of like, I wouldn't say didn't bend the rules, but, the consistency rule is a big one. You're right, Alex. Thanks for bringing that up, because you can't trade like that on a daily basis and hope to get anywhere, right? Unless you have extremely, lots of experience like those guys do. And even them, they don't trade like that. So it's just obviously they're up the ante because they were in a competition. You actually get competitions like that span over like, I don't know, like a week or stuff like that, like the world trading competitions and stuff like that, where you can actually go crazy pretty much. But you won't find those guys actually that win those things straight like that on a daily basis.
No, it's a one-way ticket to blowing your account. Like to put it into perspective, everyone watching, like, if that had gone the wrong way with the way that he'd put that up, then that's it. Like that's kind of how it is. But these guys, again, they're not your typical traders like Coach Richard put out. He isn't just putting a trade on and just doing a 50-50 going, well, I hope it works. There is a strategy behind it. There is thought behind it. There is that. Of course, the stakes are raised because they're in a
100%.
head-to-head competition. But as we said, you would not get traders doing that every day. We wouldn't be talking here on Forex Fire saying, hey, risk 1% of your account. And then you go over to the futures side and they're saying, max it now. That's that's not what's happening. Just a competition.
Yeah. No, they did a good job.
That being said, I almost forgot about that. Sorry, Tiger, go ahead.
Oh, I was just going to say they did a good job of explicitly saying that this is just for the competition. So, yeah. Just so that nobody got thrown off. Like, what the hell are they doing? Because they said that they're like, half these trades we probably wouldn't normally get in, but they're just obviously going against each other. So.
Yeah,
absolutely. Well,
What
Tiger, if you're doing your crypto trades,
what's that?
Sorry, I said if you're doing your crypto trades, we'll have to do a head to head on some Bitcoin trading. I know you've been doing well with your record.
Yeah, no, I'd be happy to do it on a 1 and 5 minute time frame. I think it'd be quite fun.
Go crazy. Get crazy on the Bitcoin charts.
Yeah, that'd be fun. I did want to point out, Samuel, because I did see where you said you were thinking of putting in a limit order. Just so you know, for me, if and when this pound New Zealand does come down to my demand zone, I really like to see this type of a pattern. It's kind of a confirmation pattern. This is what I drew here. So, obviously it's a 1 hour time frame or 1 hour demand. And actually I drew that clear up here. Well, yeah, I drew. Okay. So I meant to draw this down where that 1 hour was. I'm not trading this zone, but let's just say that was the 1 hour zone. So just an easy way to get a confirmation entry. This is for any trading style you guys and gals do, right? If you're trading a reversal, or if you're waiting for a support resistance bounce, if you're waiting for a 61 or 50% fib bounce, or a supply or demand bounce like me, right? When you have price coming down, like for me, I would buy orders here or buy in this zone. Be going down to a 5 minute time frame, maybe even a 1 minute time frame. This is the kind of price action I like to see once it hits my zone. So let's say price hits the demand, right? Obviously, the aggressive approach is just limit order, like what you were saying, Samuel. But something if you want to kind of limit some of the potential losses is when it hits the demand or supply. This is exact same in reverse for supply zone, right? Comes down to supply, comes down to your zone. It's obviously going to bounce, retrace. It may turn around and come a little deeper. But this is what I like to see. I like to see the break of structure, right? So we've broken this level, right? Right? Broke that level. So when it breaks that level, then I like to see it come back in, and hopefully we've formed a smaller time frame demand zone. So it'd be a kind of another confluence, right? You got your higher time frame demand. But if we can get that price action, ooh, that's golden. Because now on this short-term downtrend, because if I'm buying in demand, I have to have a short-term downtrend, right? It's going to be a short-term counter trend, all right? That's just the way it works. But at least if it shows me that break of structure, well, that makes it a hell of a lot easier to buy a pullback if we can get a retracement into the zone. Or this is where you could use a 50% fib, or a 61.8 fib, or a kill zone fib, right? The 88 and whatever the other number is.
Yeah, so other sort of say price confirmation or pattern confirmation, rather than just placing a limit order and assuming that price is gonna, just react from the area.
Yep. Yeah, so let's just say we threw your
there
fib
will
up
be
there,
situations where price just slices through those support or demand zones.
Yeah. I mean, me personally, I love supply and demand zones. But if you just wanted to use just a fib retracement, 61 or the kill zone, which is 71 to 88, right? That's kind of its own zone. or even just a 50, just some type of pullback into this range, right? From the break of structure on back, right? That's just kind of a cool, simple way to, just to get rid of some of the lower, what's the word? My gosh. Some of the zones that may not work as much. Lower quality, that's what I'm trying to say.
We
Lower
get
quality.
you. We get you.
So yeah, it's just a cool way to kind of prove itself, if that makes sense. So hopefully that helps, but that's something that helps me a lot. I mean, I do a lot of limit orders, but this higher time frame one, probably I'd be okay with just a limit order on this one. But if I were to buy that trade up here, again, assuming we get that push through and close above this overhead supply, yeah, this exact spot, this is exactly what I'd be looking at. I'm not just going to limit order in on this one. I have to see something like that. Break a structure, retracement, and then turn around and buy the market. So I hope that makes sense. Hope that drawing is simple enough. But yeah, confirmation entry. I mean, it may turn around and just run off and leave you, right? It may do that, right? You'll have them do that. But it'll also keep you out of a lot of losing trades. So there's kind of a trade-off, just like anything else in trading.
Yeah. I think like to add on to that for what Coach Tiger was saying there. Sorry to cut you off, Coach Tiger. I apologize, but to tag on to what Coach Tiger was saying there, when trades run away, I think a really good thing to remember, and I think all of us here can probably attest to this. The great thing about trading is, even though it runs away, you're going to get a trade in the next couple of hours. If it's not the next couple of hours, it's going to be the day after. And if it's not the day after, it'll be the day after that. So always remember, and I always do this because it is frustrating when you go, yes, I'm right, it runs away, you don't hop in or whatever happens, just to go, oh, you know what? There are so many opportunities in the market, especially if you trade more than one pair. So always go back to that and say, it's okay. I'm trading tomorrow. I'm not giving up today. If that was your last trade ever, sure. But just remember that, you're going to hop into more trades. So if it does run away, you're going to have another opportunity. I can't tell you how many trades have run away from me or have taken out my stop loss and then gone to my take profit. And I sit there and I'm frustrated. But, you're going to trade tomorrow and the day after and the day after that.
Mm-hmm. The market's not going anywhere.
Yep.
Yeah, absolutely exactly nowhere. Right. Absolutely nowhere. And there's always a trade around the corner.
Absolutely.
Let's do this. BOS. So hopefully that diagram makes sense. Hopefully that helps somebody. Yeah, when in doubt, especially when you're still developing as a whatever type of trader, right? Anytime you can get a break of structure, it's just a very nice break of structure and close, by the way. It's just a very nice confirmation entry. That's about the easiest way to get rid of a lot of losing trades. If you don't get that break of structure, right, then just avoid it. Right? But as you get more and more experience, you'll get your trust in whatever it is, support and resistance, supply and demand, break retests, right, fibs, whatever it is you like to do.
Absolutely.
So that was, what time we got? 4:50. Oh, we got 5 minutes. So yeah, I'll just go over like one more alert. Maybe we can go over a couple of more afterwards, and see what.
I think there was a
question
for you back there.
What's that?
Go on.
What was that?
I just want to say everything everyone in the chat there. We'll be taking a mid-session break in about 6 minute time. So again, don't go anywhere if we do disappear. We just need to recharge our batteries a little bit, take a 15-minute break. But Coach Tiger will go through a few more markets here. Also, guys, in the chat, if you want us to look at anything, technical analysis, opinion trades, economic news event, any of the markets you like to follow, then we'll be happy to do that. All right.
Absolutely.
Yeah, absolutely. I think I saw a question for you a while ago, Coach Tiger, and I already know the answer to this, but we've only got a few minutes, and I think it'll be the perfect way to finish it out. They asked you, do you trade, what is it, ICT? Do you trade ICT? So maybe I know you don't, but obviously you can give your thoughts on that if you are familiar with it.
Yeah, I don't dig into all the acronyms. I really don't, guys. I do supply and demand, and I look for liquidity, right? So let's just say, well, this is actually a perfect example. This chart I'm on right now, right? I mean, obviously, I look for unfilled orders and zones, right? I want to see that zone break up previous structure, previous high. But when price comes down, I don't like it just to come drop straight in, right? And then limit order or even the confirmation. I like to see this kind of action right here, where you got some lower lows forming, you got buyers here trying to buy the market up, you got sellers trying to sell it down. So what happens here? I mean, as far as ICT and all the acronyms, the best I could say is I just look for liquidity buildups like that, which actually that would be a red. So when people are buying this market right here,
concepts is pretty much to do with liquidity, buy side liquidity, sell side liquidity grabs, sweeps, fair value gaps, breakup structure. I mean, there are so many different models there that it can get quite confusing. I'll be 100%.
Right, it confuses me, but yeah,
when it comes to that. So if you say you trade ICT, I believe you're probably going to pick one model and then try to trade that. But that being said, like Coach Tiger does, Coach Michael does, I use some of the concepts as well. We just sort of like, wary, or we know that there is some sort of market manipulation that can take place, right? Your accumulation, manipulation, distribution type of vibes. And then you're comparing that with different strategies, like Tiger looks at supply and demand. He looks at the market make a move. You'll see Coach Michael do that quite a lot with all these diagrams, the actual sideways different patterns that he's looking at, whether they're half bats or, whatever he's looking, M's and W's, those are all market makers sort of manipulation type of vibes, right? And then wait for that manipulation to end, market to catch direction, and then get involved, So we all use, I would say, to some extent, ICT vibes and models, but whether we have stolen that from ICT, I don't think so. It's just always been there, right? They just sort of made it like really popular and gave it funny names. And nothing against the ICT model guys out there. So don't come, after me for that in the comment section. But
yeah, that's the thing. I don't even really follow all the terminology. I just know I use supply and demand, and then I look for liquidity sweeps too, because the banks, the banks have to have a lot of orders to fuel their multi-million-dollar orders. So, this is what I love seeing. I love seeing stop losses just above a demand zone that I'm trying to buy, because when they're placing their buy orders here, then their stop losses are obviously going to be sell orders. Okay, the opposite of a buy is a sell. Well, the banks need to collect a lot of sell order liquidity to fuel their multi-million-dollar orders, and then the end of the road, if you will, the unfilled orders from a demand zone. So unfilled orders plus sell orders, right, to fuel their move to push price up. So that's it. But yeah, we can definitely go over. We haven't done it in a while. We can kind of go over accumulation, distribution. Kind of look at that,
for
maybe
sure.
in a
All right, let's do that after the break. We're going to be taking a 15-minute break in a few seconds' time. Guys, we are watching the chat there. There's a lot of questions regarding some of the markets you guys follow. We will definitely get to that after the break. But also just quickly to remind you guys, we want to give a 5K challenge account out during the session. We normally do it like an hour after, like 6 a.m. Central, right, Tiger? So yeah, do stick around for that. Again, you must make sure that you follow the steps we talked about before. That's registering or subscribing to our Instagram handle, as well as Hola Prime TV and global YouTube channels. Make sure you keep on commenting during these sessions, and make sure that your email's linked to your YouTube bio, so we can get hold of you with those account details if you haven't won already, right? So again, do stay tuned, guys. We'll be back very, very soon. Alex and Tiger, have a good one. I know it's a very short one,
Awesome.
but we'll see you soon.
Yeah.
Good.
All right.
Will.
All right.
I'm sure backend will let us on a break soon.
Hola Prime, trade with transparency.
Hey, hola amigos, I'm Michael Keller, and I'm one of the trading coaches here at Hola Prime.
But more importantly, I'm just a regular guy who turned trading into freedom, and I'm here to help you do the same. So this is a glimpse into who I am in front of the screens and beyond the charts. See, a strategy will get you in the trade, but mindset keeps you in the game. I started trading back in 2012, and honestly, I lost more than I won in the beginning, but every loss taught me something. It wasn't about having the fanciest indicator. It was about mastering my mindset.
Living in Mexico has taught me to slow down, breathe, and be present.
Trading is what I do, but it's not who I am. I'm a dad, a husband, a traveler, and a student of life. And all of that makes me a sharper trader. When I'm in flow outside the charts, I'm in flow on the charts too. This game doesn't reward speed, it rewards skill. Listen, everyone wants to flip $100 into 10,000. I get it. But be consistent, focus on execution over excitement, risk small and learn fast. And if you ever feel lost, reach out. That's what we're here for.
Well, guys, that's a glimpse into my life, my story, and who I am, not just in front of the screens, but beyond the charts. I hope to see you in the session soon, and let's grow together. One day, one trade, one lesson at a time. Welcome to Hola Prime.
Hola Prime, trade with transparency.
Hi there, my name is Richard. I'm one of the coaches from Hola Prime. Join me as I take you behind the scenes on a little tour of what I like to get up to on a daily basis and beyond the charts. I started trading 16 years ago, but through persistence and a very high level of dedication, I got to learn 3 invaluable lessons through my career. That trading should be treated as a business. It's really not a game. Consistent profitability demands effort, and there's really no shortcuts or any way around. And especially risk management, which isn't option. It's part of your survival as a trader. You see, early on I realized that success in trading is only 20% strategy and 80% mindset and emotion. Now, as a coach at Hola Prime, my focus is very simple. Helping traders build systems with an edge, cultivating the discipline and focus needed to execute them consistently. You see, guys, the markets doesn't care about you. It will humble you if you let your pride override rules, and reward you when you execute your plan without fear or hesitation. As a trader, I like to get outdoors as much as possible. Really try to strike a balance between trading and also leading a healthy lifestyle. Leading a healthy lifestyle for me could be anything. Hiking, I love swimming as well. Today is not really the weather to go and swim, but I will take the dog out for a walk, folks. Really trying to force healthy habits so I can stay focused when I really need to, when I'm behind the charts, and all the stresses that comes with it. As getting outdoors really helps relieve those stress, and it helps me personally keep focus as much as possible. In my spare time, I like to play league darts with my trainers. And just as in training, skills and practice is everything. And that's a wrap, guys. Look behind the scene of who I am, what I do every day, beyond the charts. I hope to see you in the session soon. Take care.
Hola Prime. Trade with transparency.
Well, hello, everybody. My name's Tiger. I'm a coach here at Hola Prime, and I wanted to give you a quick little glimpse into who I am, both inside and outside of trading. So let's check it out. So I've been trading now for going on 11 years, and that first decade of my trading was all about technical analysis. And really over the last few years, though, I've really dug a lot deeper into fundamental analysis and sentiment analysis, seeing how the bigger banks and institutions are trading so I can ride their coattails, so to speak. They're the ones making the money, so I've just kind of looked at trading like Edison and his light bulbs. He's went through thousands and thousands of different prototypes in order to find the one that worked. Look, one of the things about trading that people get wrong is they think it's an overnight get-rich-quick scheme. So, for me personally, all the hard work was done well before I even picked up trading, and it all had to do with reading some good books. So, one of my favorite books right there, The Magic of Thinking Big by Dr. Schwartz. And as you can see on there, the chapters, best way to read this book is read chapter 2, 12, and 13, and then turn around and read the whole book. Powerful, let me tell you. And I'm sure you've caught that above my bookshelf. One of my biggest things that I love doing is bowling. I'm a very competitive bowler. Bowled a lot of perfect 300 games, so they give me these nice little trophies whenever you bowl a perfect game. Got another one for an 800 series, basically bowling 3 games of 800 or higher in a 3-game series, so it's like a 250 average. Pretty good stuff, but competed national tournaments, state tournaments. I've won a lot of them, so bowling, that's one of the top hobbies that I have. Outside of that, I love singing. I like to I like to go and belt some tunes, whether it's karaoke or just singing in my car, some carpool karaoke. But other than that, listen, on the weekends, I love nothing more than just to hang with my girlfriend. She's an awesome, incredible woman, and she kind of balances me out because she sees how hard I focus on trading. So it's just a very good reset at the end of the long, hard week of trading to just get away, just step away from it all, go enjoy each other's time, and prepare for the next week. So that's a bit about me. Just let us know how we can help. Just remember, it's not a sprint; it's a marathon. Okay. The basics of trading are quite simple to learn. It's just all the nuances that take a while to really master. So just keep that in mind. Don't overwhelm yourself. We'll take your hand. We'll lead you to where you want to go. Like I say, just one step at a time. So with that, have a wonderful day. Look forward to seeing you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm James. I'm one of your coaches at Hola Prime. I've been trading for about 30 years. Can you believe it? Seems like an awfully long time. But in that time, I've learned a lot about trading the financial markets. And I've learned the best way to trade the markets. By dawn, I chase waves, chase stocks, and sometimes chase my own sanity. Trading, like surfing, is all about timing. Wait too long and you miss the move, and jump in too early and you just wipe out. If you're a new trader and you're struggling with your trading, I think you've come to the right place. I'm really looking forward to meeting you and helping you with your trading. I'm approaching a stop street now, and I'm going to have to stop. Emergency brake if there's traffic coming. And that's one of the things you've got to learn in trading, as well as how to keep safe. And it's one of the main things that I teach in my trading philosophy is risk management, which is not taught very often. Trading is a bit like driving a car, really. You've got to have a license, and in trading terms, having a license is like learning how to trade. And once you've learned how to drive and got the license, learned how to trade, you've got to get good at it. And my philosophy is to teach traders how to trade properly using the tools and techniques that they should be using. My specialty is swing trading, and it's a bit like riding the waves. I've been a surfer for a very long time, and swing trading is not much different. You've got to find the sets and catch the right wave and get out of the way when it's time. A lot of people ask me, how did I get to where I am today? How did I learn how to trade? And how can they get to where I am themselves? I think the best answer to that is to get educated, learn how to trade. And there are all sorts of resources out there for you, including fantastic resources here at Hola Prime.
Hola Prime. Trade with transparency.
Hi, I'm Adelina, one of the coaches here at Hola Prime. But don't worry, I won't make you do endless push-ups unless you're up for the challenge. I'm here to help traders build discipline, strategy, and confidence in the markets. And here is a little glimpse into who I am beyond the charts. I've been trading for 4 years, and it's been the most humbling teacher I ever had. At the beginning, I used to chase quick wins, but I learned quick losses hits hard. Trading isn't just charts and numbers, it's a mirror. It showed me my patience, my fear, my strength. Protect my capital and let the patience pay me. Because guess what? In trading, your biggest edge is you. Markets are intense, but it's just like an ice cream on a hot day. It can get messier, but it's always sweeter when you approach it with the right mindset. Enjoy the process and savor the small wins. Of charts, you can find me recharging by the beach, traveling to new places, or hanging out with my pets. I love staying active, but I also enjoy good food and music. Balance is the key. That's a bit about me. Don't forget, life is too short for just work and no play. Yes, even in trading. I'm here to guide you, cheer you on, and make sure we have some fun along the way. So hope to see you in a session soon.
Hola Prime. Trade with transparency.
Hi, I'm Sam, one of the coaches here at Hola Prime. And in this video, I'm going to give you a short glimpse into my life beyond the charts. Outside of the charts, I love to cook. Anything with fresh local ingredients has a thumbs up for me. And when the weather's good, I like to go out, have a quick jog, keep myself healthy. I started trading almost 15 years ago, and believe me when I say, it wasn't an easy journey. There was a lot of ups and downs, mostly downs at the beginning, and it took me, I would say, almost 10 years before I could actually call myself a trader. Personally, I like to travel. I like to go to different places, see different cultures, meet new people. I also like a good spa day, you know, just sit there by a pool, relax, get a massage. You know, you can see from the screens behind me, it's just a lot of stress, a lot of digits, a lot of moving, a lot of fast moving markets. You can't spend your whole day in front of a screen. You will burn out, and sadly, you probably won't be as successful as if you just relaxed a bit more.
Hola Prime. Trade with transparency.
Hi, I'm Tony, one of the futures coaches at Hola Prime, and this is a little glimpse into who I am beyond the charts. I started trading 10 years ago. The early days, full of mistakes, but every loss was a lesson, and trust me, there were plenty of lessons. But here's what I realized. It's less about the perfect strategy and more about the mindset and emotional control. An example of this is cutting your losing trades and controlling your winners. Because if you don't, the proverbial train is coming and you don't want to be on the tracks when it does. That's why, as a coach, I don't just teach setups. I help traders build systems, not just on the charts, but in their heads too. Now listen, everyone wants to double their money overnight, but real growth, it comes from small, smart moves repeated over time. Be consistent and be patient, and don't be afraid to ask, because at Hola Prime, we're here to help you grow. Outside of trading, I'm big on exercise, travel, finer things. It's how I reset and remember what trading's really about. Profit? Sure. But what that profit can do for you and for others, that's what it's really about. So that's a little bit about me. Hope to see you in a session soon, and let's make some money, one trade at a time.
Hola Prime. Trade with transparency.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
All right, back
Hello.
again.
Howdy.
Yeah.
Fastest 15 minutes of the day.
Oh
It's
my
over.
gosh, didn't that fly? I cannot believe how quick that was.
Yeah, big time.
Stupid
Big
fast.
time, big time, big time. Guys, just before we jump back into the questions in the chat there, I would like to announce again to those that don't know already, but I see there's a lot of new names in here today, that we will be holding a little competition on Friday. So this Friday, which is the 26th, during the futures session. So you guys probably watch the futures coaches go one-on-one with each other, head-to-head trading amongst themselves. Now, for this Friday, we're actually looking for 2 of our viewers to participate in a friendly challenge. You'll be like live as we are sitting right here on stream and be teaming up with the coaches, I believe, one of the coaches. So 2 viewers will then be going, we'll be going head-to-head amongst each others, right? So it's a really good opportunity to, get yourself out there, maybe show some of your skills, your trading skills. We do have a Google form, I believe, that will be dropped here in the chat very shortly. So if you're interested in that, please go fill that out to, stand a chance to be picked to be one of those lucky viewers. So I believe there will be a $25,000 challenge account to be given away that you can win should you come out on top. And the coaches won't win anything since they work for Hola Prime, so they can just walk away with bragging rights. So again, guys, this Friday, this Friday up and coming, the 26th, we want to be going ahead with that challenge. Again, the Traders 2 versus 2 takedown, it's called. So we'll be going head-to-head with 2 coaches of your choice. So there we go, guys. Again, we'll be dropping shortly a link there in the chat box with a Google form that you can go fill in to get yourself signed up there. And again, winners will obviously, or those that are picked, will be announced directly. So I believe you can also go onto our Discord channel. If you haven't signed up there already, please do that. And you can find some more details in there as well. Right, I believe you can just DM one of our moderators on Discord as well if you're interested in that, or you can email us, contact us at holaprime.com. Tell us that you are interested, and again, maybe you'll be picked as one of those viewers to go head-to-head with a coach of your choice, or 2 coaches of your choice. Right, I've seen I just dropped it there in the chat box, the Google form, so make sure you go click on that. That's another way you can do that. Go fill that in. And good luck. Good luck, good luck, good luck. Also, let us know who will be interested in actually doing that, guys. And while you're at it, with all these new names in the chat, there, maybe drop your country's flag for us as well. Or just mention to us where you're from. Always great to know where all our viewers are from. So please do that as well. Again, like and subscribe, guys. Share it wide. Far and wide with everyone that you might know. trying to grow this channel as large as we possibly can. We can only do that with your help.
Yep. Go kick their butts. Go kick those coaches' butts.
Samuel, sign up already.
Yeah. Let's see here. I just had to do a quick schedule thing. Awesome. Awesome.
Cool.
Well, let's see.
Cool.
Do you guys have any?
Lagos, Nigeria.
Lagos. Okay. Nice. Friends are still sitting on the sidelines, Samuel. Tell them to get in the game. You got to risk it to biscuit.
Nothing to lose. Only brownie points. And a 25
Short
challenge,
goals.
of course.
Definitely shout you out as well. Give you a little screen time.
Janice, are you short gold?
Giannis is short gold. Okay. All right. Yeah, I was looking at gold myself. I was looking at this candle here on a 5-minute. Problem is it hasn't broken a structure yet. I was looking on a long as well, but it's kind of curling around. I like the short idea because you're getting negative divergence at this point with the RSI. Yeah, that's actually one I was looking at. Getting it's not a huge divergence, but it's a divergence nevertheless. Right? A bit of a divergence there. And still some higher
Catch up.
highs.
So gold at the moment.
Yeah. This morning.
There's so many people in the chat there. I'm completely forgetting what we were supposed to look at.
Yeah.
Guys, it's posted there again.
Yeah, posted
I know
again.
gold was one of them.
Yeah, I'm just kind of digging it. Gold.
Do apologize.
Everybody likes gold. Hey, I like gold too. I'm a currency trader, but I've been trading gold mostly of late. Let's see here. Dollar Swiss. Oh, okay. Dollar Swiss, pound dollar. Okay. Dollar Swiss. Yeah, we haven't looked at dollar Swiss yet. And dollar Swiss, I believe, is on my top setups. Where are my drawings at? Here we go. Dollar Swiss, bullish score of a 5. Let's look at it. See if we can find a demand zone over here. Yeah. Okay, I remember this one now. So we are currently in a demand zone, a higher time frame. It's bouncing into it. Now this, I believe, was it's obviously a daily because it's a yellow. Way back in time. We're going to the Wayback Machine for this one. Look at that. September the 5th of 2011. So that's a 14-year-old zone. I don't math. I'm sorry. Yeah, 14-year-old zone, right? Well, look how strong it was way back when. Just gigantic expanded range candle. So that was a really, really good move back in the day. So, how many traders potentially? I mean, obviously, they would have had potential unfilled orders. We saw the strength of that. Now we're 14 years into the future, but keep in mind the banks and institutions, they're looking in the Wayback Machine like that, right? So it's just something to be aware of. Now it's obviously I've got a bullish fundamental and sentimental analysis reason to buy this thing, but we're kind of a downtrend on a daily time frame, except for the last few days. So keep in mind, last week we had the bullish report for the GDP. We had the bullish report for the jobs, unemployment claims. So a little bit more of a short-term reason to maybe pay attention to the long side. If we bounced into that demand zone from way back when, well, we could potentially be getting a little bit of a push up. So all I really care about is this most recent move. Well, we got that ugly wick from Wednesday. Obviously, the rate decision candle, which is that green candle there, with that big ugly wick. So perhaps we could find something in a smaller time frame. Take a look. And that's 4-hour time frame. So let's just keep my drawings off for a minute. Yeah, wick is just ugly, right? It's kind of a scary place to be. So if we keep going up, well, I got a little bit of a demand right here, actually. Oh, I actually drew it in. Okay. So I got a couple demand zones here. And there's actually one way down at the bottom. What was that, a 5-minute time frame? I can't even remember. I believe it was a 5-minute
Tiger,
time
with
frame.
those big ugly wicks,
Yeah.
wicks, do you usually stay away from those areas? Like, if you know that's a rate decision or whatever it is, it's caused by the news. Do you put less emphasis on it? Do you put more emphasis on it? Do you have it the same, and does that affect your decision about hopping in, or do you just see it how it is?
It just the challenge with it is the risk, the stop loss you have to end up putting on. So like, well, let me just go down to 15 minutes. I mean, when you look at it on a smaller time frame, it's not that big a deal. On a higher time frame, it just really, really increases the risk. It decreases the reward to risk, is what I'm trying to say. Because I prefer to find a 1-hour candle, like an actual body, a candle body. You guys and gals in the chat, you hear Michael all the time talking about, I want bodies, not legs, or not wicks, right? Well, that's where the bulk of the trading action. Yeah, that's where the bulk of trading action tends to take place, is obviously within the body, right? So, yeah, it's just it just kind of, because if I look at this as a zone, well, first of all, it's a efficient market, but I would literally have to draw, if I'm looking at a 1-hour time frame, if I'm including the wick, well, I'd have to be looking at that red candle right before it. So that just makes for a gigantic a gigantic range. So, but again, after going down to the smaller time frame, I do remember I actually drew it up on a 5-minute time frame. So I'd be okay with trading this one. It's just that the probability of it coming all the way down, or at least in the short term, probably not the greatest. And if it does, well, then we've officially turned into a downtrend. So it'd be more counter trend.
That's fun.
So it's just kind of it's just kind of a double-edged sword. So I drew this projection tool up when price was, further down in this area. But now that it's kept going, now I might just be more interested in, one of these zones here, just because the structure looks a little better. It's less sporadic. It's a little more predictable, I think. Let's see, you got a 30-minute demand candle there, but you got, you got the 1 hour below it. So let's just turn my drawings off. Yeah. And this one's even questionable, because if we look at the wick, or if we look at the gap, it's really not that big of a gap, right? I mean, that's our fair value gap coming out of that. It's not really that strong. And this fair value gap on a 30-minute looks a lot better. So here's the gap on the 30-minute zone, and that's ultimately why I put my alert right here at 0.78. So 0.79. I mean, that's a nice round number as well for any psychological number traders, right? That's a nice round number.
Yeah.
Just ahead of that zone. So break a structure, break a structure. Now, it didn't go as high as I like it. I'll be honest. It did break, but it just kind of got lazy and went sideways. So it's really not the greatest. So yeah, if I trade that bottom one, that's obviously the origin of the strong move up. I just would have to be getting some verification on this. So that little drawing I drew for you guys on the confirmation entry, that's going to be a must down here, right? I mean, I don't want to just do a limit order. I want to see price come in on this smaller time frame, break that structure. So break this structure, come down. Maybe we form a demand zone here on a smaller time frame, or just a 1 minute, right, for a buy. So confirmation entry for sure. That's what I would be interested in. And then maybe, and it's a 1 minute time frame, but maybe on a 1 minute time frame, we could get a little bit of a demand right there. Demand inside of a demand, that confluence. Love to have it have that little gap up after the demand. Yeah, I would definitely make this a confirmation entry, not just a blind limit order. So that's kind of what the wicks do. They just kind of They cause a lot of chaos. I like to see actual bodies, not just wicks. Or a doji, right? A doji is real strong.
Yes, dojis.
But with this, just a big, long, ugly wick, yeah, anything can happen here. Coach Michael says all the time, right? There's going to be a lot of trapped volume in here. All the banks could probably just flip all the way through that. I don't know. It's just I have more success on the bodies like this right here. Like on this one, it's not a doji, but it's kind of close to a doji, right? But at least we got a body in the middle and not just one big, long, ugly wick underneath. So yeah, I hope that kind of helps. But yeah, just to kind of finish off the example here. I mean, this is really the last inefficient price action that's closest to the origin, unless we want to use that. And plus, it's a long ways away, right? So perhaps you take a confirmation entry in here, maybe not put a full risk on, or maybe you can average in. Right? Maybe you put a position on in this area. I mean, if you want to be ultra conservative, you could put in a position here, put your stop loss all the way down here, with the understanding that price could come down, and then you could add in more positions. So average in, right? Dollar cost average, as they say it. I mean, that's a little more advanced. Maybe I shouldn't really get into that, but it is a little more advanced. But it's a way to at least get you a piece of the action if price actually hits this zone and takes off, right? But ultimately, yeah, the 5-minute time frame, we saw that was a pretty good looking demand because you had a really nice gap up. It's just whether or not it's going to get there. I mean, that's pretty much outer space as far as I'm concerned on a 5-minute time frame. Another 30 pips down. So yeah, I mean, confirmation entry opportunity in here for your dollar Swiss. Got that really nice gap. You got this little break of this recent high. Yeah, it does go up. I just wished it would have went not so low. This is lazy momentum. The first 3 candles out, there was super strong momentum. So that's why I'm giving it credence. But it could have looked a lot better than that, before coming back. That would have made me feel a lot better about maybe putting on a little more of a full position. But at this rate, I want to place a trade and not have my gut burning me. So, just tap in, test the water, right? So yeah, I think that's probably about the best move on that. Now we do have a little bit of a break of structure happening now. So this is what I said, I think last night. You had this lazy move up, then you had a sharper decline. So that down leg is stronger momentum than this up leg. So, if we get that candle's still alive, but if we get a close, down in this area, maybe we could find a place to sell up top. Take a look. Let's see here, 1 hour. Yeah, so you do have a 1 hour candle at the very top, as far as a potential sell. Got a nice gap underneath. Okay, that's the closest to the origin of that strong move down. 1 hour time frame. So 15 minutes, we could just kind of keep going down the list. Okay, it's getting too tiny up in this area. That's too little. That's too small of a zone that right up there if I were to wrap a rectangle around just that candle. So again, on these smaller time frames, I would like to have at least like a 10 pip range, right, on a supplier demand zone. And obviously you can kind of cheat it by adding, a few more pips to your stop loss, but the structure is what I'm more after. Because you technically have a little bit of a gap on a 15-minute time frame from here to here, right? Very tiny, but again, it's only we're talking 2 pips. So you got to give yourself a little more wiggle room than that. So I think that 1 hour candle would probably be about the best bet. If you go any lower, you're just playing with fire. Even on a 5-minute time frame, nothing. Perhaps you could use this as a 5-minute supply right here. But again, it's not the closest to the origin of the strong move. So it's just less probability, right? This is higher probability. This is lower probability. Okay. Banks love closing gaps. They love closing gaps as close to those origins as they can. But if you have an efficient market all the way down through here, well, then that would be a good one to take. Except the problem is that's not the case. We got this 1 hour gap right here. So for that matter, I'm going to delete that just so I don't get, tantalized. But none of that makes any difference if I don't get a close below that line there. So yeah, essentially close down here, retrace for a potential sell down. Right. But I'm going to leave that a light red because, again, I need more information. Need more info. And you can also question, is that even going to be strong enough, right? Maybe the stronger move would obviously be to come down and break maybe one of these lows, or this low or this low, right? That's just the first low. So just this, and that's going to look similar to that example I showed, that confirmation entry. That's exactly what this is, actually. Break a structure, retrace to the zone, and then sell. So.
Cool. So if it's that low probability, like we were just discussing then. Oh, sorry. You go, Richard.
No, all good. You complete that. I'll address some of the questions there quickly after you, Alex. No worries.
Oh.
Okay, yeah, I was just going to ask a question there, Tiger. And I think, I'll be wondering about this. So that low probability zone that you were looking at just before, is that like a trade management kind of thing? Because you're like, I'm going to delete it, so I'm not going to get tantalized. I'm assuming if you think it's low probability, you're just going to not even look at it. You're just going to say, I'd rather go for those high probability trades. So is that you screening it there?
Yeah, I mean, I'll still pay attention to some of these lower probability ones. I'm extra picky, even more so now, about making sure I get that confirmation price action. So price comes up, does this number, and then on this move, it breaks that structure right there, closes, and then comes back and tries to find a supply zone for a sell. Just to kind of see that crowning.
Yeah, so it needs to move a whole lot nicer, I guess, then for you to actually consider it. Like the stars got to align.
Yeah, exactly. Yeah. That I need to see. I would like to see what looks like institutional VSA coming in, volume spread analysis candles. Again, we don't have centralized volume in Forex, so we kind of have to make do with kind of a makeshift way of looking at it. So VSA just so happens to be what I like to see. But yeah, see that high trading activity, yellow candle or, red candle, like we got red candles back here, right? This is a strong institutional move if we just go back in time. When you see those big red candles after these lazy average candles, okay, the green candles are just kind of your average volume spread analysis activity. When you see red candles like that, okay, you can bet your bottom dollar that's a bank stepping in, right? You can see right here they're dropping price down. Let's take a look at this. So you had buyers over here, okay? Those buyers just all throughout this range, right? They're placing their stop orders below. So what does a big bank do? Well, it gets on their horse and they just jam price down their throat to collect all these stop losses before ultimately just jamming price back up again. That's a liquidity sweep. Somebody asked about ICT earlier. That's what that is, right? So when you see institutional volume or institutional activity or, tick charts, tick volume, stuff like that, those are the moves you want to pay attention to. And that's why I'm keeping an eye on this zone ultimately at the bottom. So yeah, that's why I wrapped that 5 minute rectangle around that demand zone, right? You had a couple basing candles. I guess that would actually look better on a 10-minute time frame. Yeah. So hopefully that helps. I like institutional volume. Makes the world go round. Well, peanut butter makes the world go round. But as far as looking at a chart, volume makes the world go around.
Right. Tiger, you're looking there at the dollar Swiss franc for followers.
Mm-hmm.
Cool.
Yeah.
Thank
Yes.
you.
This was dollar Swiss. Yeah.
And there's a
Yep.
question from Samuel directed to me. I'll address that after you're done there. You don't mind?
Oh, okay. No, if you want, you can just go ahead and jump on. I'm going to try to see if I can go through some of my neutral charts, see if I can't find a 5-minute supplier demand zone to tackle.
Okay, I'll do that quick, and then I'll pass it back to you, Tiger. First things first, some of the things that the indices are on the long-term range where they start printing all-time highs on repeat. Yeah, that's definitely what we've been seeing. You're 100% correct there. So his top assets to trade, if he sees a good entry on indices, the NAS 100 or the German 30 on a 1-hour time frame. Cool. And then he goes on to ask, how do you spot a good exit on profit and an exit on mitigating a losing trade? Good questions. Since I use market geometry to find trading opportunities, I mean, I could probably discuss those questions on this chart here, and while we have it open on a NAS 100, I will always slope a pitchfork into the direction of the current move. Obviously, in this case, very strong bullish to the upside, as you noted a little bit earlier on. And then I'll change it around with the settings, because it's a very visual tool. You need to select 3 anchor points, and you can play around with settings and see which of the settings price has respected the best. And obviously, with a strong upwards angle that we have here on the NASDAQ, it makes sense just to use the general Allen Andrews setting, which is your original setting, right? So we got shift pitchforks as well as modified pitchfork settings. But in this case, you can clearly see how well price is, just selecting those 3 anchor points prior to the strong move to the upside, how well price is respected. This center median line especially, we got resistance, we got the same angle between the center and the upper. It turned into support, and it rode it quite a few times. Yeah, busted underneath it a few times, but one could probably say that angle acted as support really well, especially on the center median line. Right now, price has actually tagged this upper channel line once, twice, 3 and 4 times, struggling to get above it. So to address your first part of your question, how do you spot a good exit point? Well, the first what I like to do is I typically like figuring out, if we're dealing with a correction within a trend, where is price likely to go, and use that area or identify an area from an angular perspective where I then think, listen, support might step in, maybe price is gravitating towards there, and that might be the end of that correction before the trend resumes again. Right, so that's the first part. But let's say, assume I didn't take this trade, but let's say I identified a zone there, and before price got to it, and thought, okay, I want to go long if price gets in there, maybe switch to a smaller time frame, see if, got any sort of, reversal type patterns or fair value gaps, inverted fair value gaps, break of structure, whatever you want to look at, that occur within that area. And generally, I'll give myself a wide-ish zone, so it's not just a level I want to get long at, because obviously price action can be quite volatile, especially on the NASDAQ in this example. But if I'm talking about exits here, I'll obviously always know where to place my stop, right? So my stop will then be placed below that low if I get a move to the upside. And in some cases, like what was the case with this trade over here, I like to draw lines parallel to the actual slope of that pitchfork I'm using and project it from previous areas where price, undershot this line, for example. And let's say, for example, I really want to be safe and I get long at this point over here, then I think a really, really good spot to place my stop loss wouldn't potentially just be under that low like that, but perhaps under this angular line that I've drawn parallel to one of my pitchfork slopes, right? So that's how I'll decide where my stop loss is, and then from a target perspective, I'll again use market geometry as targets. So this here, where's that nice angular shape that I used the other day? This one. I'll look straight above, because I believe then, for example, the price would then bounce from the center median line to at least at a minimum one of the upper, in this case an uptrend angular lines, in this case that one, right? So that's for me good places to place my target. Also good places to get out or take profit at, or at least take partial profits. And if you really want to then run it, and this changes dynamically, I could, for example, say I want to be out if price then hits the upper median line, whether that's now with a portion of a remaining position, or quite often I won't just take my whole position at that end there, because obviously the probability price might reach it is way lower than it would reach the lower one. So I always want to make sure that I at least take some off and then move to break even depending on where I entered, at least at that first sort of target area. But when it comes to stop losses, I will trail. I definitely do that at some stage, similar to what Alex does, and I mean Tiger does it as well. At stages where I believe, if price doesn't make it to my target, or at least I'm sitting with some good profit, that I at least want to take, not take a loss anymore. Something else I like to do is, if price gets extremely close to my target area, how many times does it happen that you miss it by a pip or something and you get a reversal against you? That I would at least then, let's say, trail a stop loss or partial stop loss all the way up, just to make sure I do bank some of that without turning a profitable trade into a losing trade overall, right? But one thing I've also learned is that the sooner I start messing around with my stop losses, and obviously you have to accept when you get into that trade where your stop loss is, what that loss is going to be in dollar amounts. Just leave it. For me personally, I don't touch it until price would reach certain points where I can then start saying I want to start trailing. Because if I start messing around my stop loss too quickly, then you're not giving the market enough space to breathe in. And so it's a difficult one, but hopefully that answers your question. I don't know if I addressed that properly. But for mitigating a losing trade, if it's a little bit more like swing trading like this in a higher time frame, I'll lose my stop loss or leave my stop loss where it's at, where I position it at, accept that risk fully. And when price reaches, let's say, a lower target, a T1 or whatever, I'll then start, or midway to my first target, I can start trailing to then, reduce the amount of risk I initially took on. But that typically will, depending on what time frame, on a 4 hour took a while. In this case, within that 4 hour candle, we had to swing back up. On a smaller time frame, like a 5 minute or sometimes a 1 minute, it could happen within a few minutes. Like you've probably seen with Coach Alex today. He really went to break even relatively quickly according to his strategy. So we do all do similar things, I believe, just different time frames, right?
Yep.
So my exit points are pretty much all based on market geometry as well.
Mm.
All right.
Yeah, awesome.
Yeah, those pitchforks,
I think
pretty accurate.
Yeah, for sure. I think I can add something onto that, and this is not to negate anything that was just said, because it was all fantastic. Especially if you're learning. If you're learning, that was invaluable. That's fantastic. But what I'd also say to everyone that's listening and watching for that question, where's a good point to exit on profit and exit on mitigating a losing trade, or spot a good exit on profit and exit and mitigating losing a trade, I'd always say backtest, because the reason that we can answer how we do is because we've been in the game, we have so much experience, and you'll always find the answer. You always will. It's so good to come to us and go, hey, what's my idea? I would suggest really strongly that you go back and you back test it and see how valid it is for the way that you approach the markets, because we're all going to trade a little bit different unless you're trading identically to us, taking all our trades, are a student of ours or whatever it is. Always make sure to go ahead and back test it, because you will find that the way that you approach the market or the way that you trade is going to be slightly different, and therefore you'll need to slightly adjust how you go on about all this stuff, and it's only going to be good for you. You'll only benefit from there, and you can even find the answer to the question yourself. It might take you a little bit longer. However, the experience that you gain from taking the time in the markets is astronomical. I mean, we've all spent so much time here in the markets looking at charts, and we know what works because we've done it 1,000 times, more than that. So if you haven't done it 1,000 times, go into the past, back test it, get on the charts, do it 1,000 times until you understand. So that's my 2 cents.
Because confidence is key. I mean, if your data, or you just went through that process, some strategies you can't really potentially backtest because, they're not just data driven, but at least if you went to visually go and reinforce those neurons in your head, you're seeing something over and over and over again that works, then stick with that in the future. And it builds that confidence for you to trust yourself, and then obviously your strategy. As you were saying, Alex, is very, very important. Backtest, put in the hours. Because you need to make yourself believe in your strategy and also your own abilities, right? So without that, shooting blanks in the dark, I think, right?
Yeah. I could not agree more. That whole part about confidence that you were saying just then, Richard, is massive. What happens if you're in the charts? You literally have this black hole behind you. That lack of knowledge, you'll always be thinking, is this working? Isn't this working? Do I need to change something? There's going to be so many questions that you have and no answers. And as human beings, we're going to get freaked out. We're emotional. We're not like machines or algorithms that can just go, we have this data, we do X, Y, Z, and we do it every single time. So you need to have some data behind you in order to stave off those questions, because they will come and they will disrupt you. But if you've got that done, you've got that backtest, and you go, I know this happens 100 times, 500 times before, I know what happens in this zone, then the questions can't do anything to you. You're not going to make changes to your strategy when you don't need to. You're not going to hop in when you shouldn't. Well, maybe you will. It's a different thing. But at least you're giving yourself a fighting chance in the market. You're preparing yourself, like whether you're a basketball player, whether you are a trader like us. We might not go to the courts and train with a team, but our practice is here on the charts. We're doing this behind the scenes, and we've done it so many different times. We've done so much practice on here. We are, in a sense, athletes in this field. We put in as much time, as much practice, learning the charts, honing our craft, in order so when game time comes, we're placed in the trade. Yeah. Well, there you go.
Labor of love.
We'll be able to do well.
Love.
So, yeah, exactly right. So there you go.
Yeah.
100%. Well said, Alex.
Yeah.
Agree.
Thank you,
guys.
Appreciate it.
To everyone in the chat there, we decided on a name based on who followed those steps that I mentioned previously. We'll be releasing that name in sorry guys, I'm trying to look at different chats here as well. In about 6 minutes time, from now. So If not, then we'll release the name a little bit later. So please do stay tuned. Again, remember, if you haven't won a prize yet and you're not fortunate enough to win one today, then just follow those steps. I'm sure there will be more chances later down the line as well. So again, guys, please do stay tuned. And yeah, looks like we have decided on a name. Yep, we have. So let's wait 6 minutes from now. Let the tension build up a little bit, and we'll be releasing that name very, very soon.
The anticipation is killing me.
Keep you on your toes, guys.
That's right.
Yes.
That's how we do it.
Loving it.
Add on. Ooh.
Well,
Right.
on that
yeah,
note,
so-
guys, you go on, Richard. You go.
No, you go for it. I was just thinking to myself, actually. Sorry. Go ahead, Alex.
Okay. Well, I had this question because I was talking it to Coach Tony this morning, and because obviously he's been around and he had some news this morning, Tiger, and he actually said to the chat, he goes, "I know that's nothing like Coach Tiger's news. I don't have any of the puns. It's really hard to make this dry." But he actually, because I see him for these quiet markets, he was interested in your guys' take because he knew that I was coming on later. And what we were talking about in the charts, there was a question that said, like, what are the most unpredictable markets, or and then it followed by what's the most underrated underappreciated, I think it was, part of trading. And we had our answers. Mine, for example, was you should know what the market conditions you're hopping into. I said that that was my one. Like, when you're making a strategy, you should know whether it works in a trending environment, ranging, consolidating, whatever it is. Like, we all know our environments that we'd like to look for. If you were listening there in the chat, like Coach Tiger says it all the time, the market condition that he wants to look for, I think sometimes we maybe understate it. So in terms of that, what were your guys, when you sit there and you go, no one really talks about this? I think it's a really underappreciated part of trading, where it is actually really important, but everyone's like focusing on like the flashy stuff over here. So Tony and I were wondering what your answers were going to be to that question, because I think it is quite important.
Yeah. Well, I think we would, like, I would say two things, but we already kind of went over the one, is just simply just cutting down your risk so that you're not feeling so stressed. That's one. But the other thing is patience, just patience in general, because, man, if you can develop patience in trading, it just helps so many areas in your life, right? We're too quick triggered as a society to overreact to things, right? But if you can figure out the patient side of trading, I think it really helps in just all areas of life, relationships, coworkers, just people in general.
It all ties into a lot of things. I think you brought it up a little bit earlier, Alex. It's like, we live in a world where you want instant results, right? Patience, you have to wait for your setup and all that. I mean, it's extremely important. And not wanting those quick results. You have those dollar signs, especially when you're starting off trading, flickering in your eyes, right? So make money, how I tied with the underrated things. Patience are obviously big there, so one said that's underrated, but going back to patience, you focus on the I think, like Coach Tony also says, like that one trade, and the setup, and just take a trade and do it consistently, rather focus on being that sniper, doing exactly what your strategy tells you to do, and then the rest should come automatically, right? Albeit if you have a good strategy, so forth, right? So patience, I wouldn't say it's underrated. I think a lot of traders actually know this, but they do sort of put it on the back burner and behind the head, right? So they say, patience is key, but it's extremely difficult sitting on your hands sometimes, right? sat here the whole day. It's Friday. I want to go home. Maybe let's just quickly do a quick trade, and see how it goes. It's basically not what you should be doing, right? Yeah, I don't know. Managing open trades, I think that's very underrated, not talked a lot about amongst traders. It's all about getting into a trade, where you're going to put your stop loss,
Yes,
and where you
agree.
put your target. So, managing an open trade for me is extremely important. And some people say, like, that's fine, just leave your stop where it's at. It's either going to work out or not. But I disagree with that. I know that the scalpers guys do it as well, like you probably, Alex, and the guys that trade the futures, is that they aggressively manage those stop losses or cut the trades that's not working out as soon as possible. But I mean, there's so many facets to it. But I think managing a position is not talked about very often.
Yeah, that's true. Yeah, I think we commented
That's a really
on that
good
a time
one.
or two. Yeah, because you always talk
Yeah,
about
so
hey, where we put our
scalpers are like typically what Alex did today, for example. So you're in and out of a trade relatively quickly, right? And typically scalpers need a really high win rate to be successful, and quite often trade more often as well. But they're also pretty much day traders. It's just it's a form of trading in and out of the market relatively quickly. Day traders, can be scalpers as well, but generally day traders or intraday traders will just, open and close a trade within the space of a day. You could be an intraday swing trader as well. But if you just would talk about swing trading, like that one I took on the German 40, for example, my objective is to potentially hold it because it's on a higher time frame over a few days. So, I don't think there's a chance in hell that price will read within a day. So I'm probably taking the swing trader approach there, holding a trade for a little longer. I mean, maybe you want to chime in there, Alex, about scalping?
Yes, scalping. What can I say about that? I see this a question: are scalpers prone to quick trades compared to day traders and swing traders? I honestly think it depends on the person. You can have scalpers that are really, really good at waiting. You can have, I think overall you can be. I think people are more drawn who are already prone to taking, quick trades, that sort of thing. I think it draws them in. So I think there's that. How should I put it? It's like a bias that you look at scalpers and go, oh, they're always hopping into trades. Not necessarily. Remember, like 90% of people that come into the markets fail. So you're always needing to look at it through that lens. But I usually find that scalpers sometimes, not always, could be incredibly patient and they won't take. They'll wait and they'll wait and they'll wait. Even though the markets are moving so quickly, like right now on the 1 minute chart. Yeah, go on.
I mean, it's patience again, and it's like not like your setup's happening. And there's a big difference. I think a lot of traders or beginners confuse the word high frequency trading with scalping.
Yes,
so we're not trading
I
with
agree.
algorithms here. Like you got like your Goldman Sachs guy sitting on a floor specifically in a building, running algorithms that they created and maintaining them, and scalping the bid and ask and that sort of stuff at milliseconds, right? That is completely different. So for a scalper, I don't know why I'm zoomed in here again. Sorry about that.
It really likes you.
I was becoming really important, so the camera wanted to listen closely.
That's right.
Yeah, like Alex, right? He's got a setup. He can do it over a few different markets to get more opportunities, but he's not in and out of the trades like hundreds of times a day. And maybe you'll deal with a ranging market that could stay in that range, and he doesn't get his setup for the entire day, and it's just no trade. And not trading for me is the same as trading as well. You made a trading decision to not trade. So being very patient, and like you said, there are brilliant scalpers out there. yourself as well as the futures guys are testament to that. Sometimes they take multiple trades, and sometimes maybe one, or sometimes not even, right? So that's the discipline that you need. It's when to trade, when not to trade.
Yeah, exactly right. And I think a really, I guess, going back to the more underrated things about this is, if you have like a time frame that you go, I know I can trade. For example, just with the scalping one, my range sets up for that 30 minutes at the start, and I go, okay, I'm going to trade from here to here, and it's just going to be in this period, so you don't get that fatigue, or you don't, how should I put this, just stay in longer than necessary, especially when markets switch over. If you're not used to that change from London to New York, that can really rattle you, and that patience can just go out the door, because all of a sudden it just starts flying away, and you're sitting there going, oh, I should get in, the market's moving, or whatever it is. If you can define the area, not only in market conditions, but the time that you're sitting in there, you will find, for me personally, especially as a scalper, that patience just becomes a little bit easier, because I clock into work essentially. I have these hours that I'm sitting here going, okay, from this hour to this hour, I'm here, I'm locked in, and that's what I'm going to do. If I leave it open-ended, the longer that you're in here, the markets for, especially because I saw a comment, it's like, I'm watching it 24/7, which I totally get. You wanna stay away from it, because it will just, I feel it'll lead you to ruin, and you really want to work on that patience and build your parameters around your trading. Otherwise, you're not going to be successful.
Yeah,
in my
I was
opinion.
mentioning there that Mondays and Fridays are mostly just to observe. There's a lot of traders that say they have their favorite days to trade, but if you look at Alex today, he said Friday was pretty quiet, wasn't it, Alex? And then generally Mondays are pretty quiet, but 2 days straight out of the gate, 3 trades within the first hour of Forex Fire session. He knocked 3 trades over already. So, it really depends when does the setup happen, and just taking it. Are you there? Are you present to take the setup? Because one thing you don't want to do is like, oh no, it's Monday. I'm not going to trade on Monday or Friday, but then you have 3 setups in a row that decide not to trade, and the next day you trade and you take 3 losses. It's difficult. Yeah. Alex, before we get to the winner of today, maybe just a last question there from Samuel, asking what's the best time frame for day traders in your best opinion? Maybe Alex, if you can answer us that question, then I'll announce the winner afterwards.
What's the best time frame for day traders in your best opinion? Well, I started off on the 1 hour. That's what I started off on. That's where I began. So that's probably what I would be saying. I really liked it. I could get in and out of trades fairly quickly sometimes, but I also got the ability to start to edge more into that swing trading. I think it's a kind of like just a good all round. Like to see if you how should I put this? Go and edge more towards that swing trading, or you start to go more down towards that intraday or even scalping. So if you're starting off, the 1 hour is really good for that, and that's probably where I would start, because that's where I did start, and it's my OG time frame. So short and sweet answer there.
Nice.
Yeah.
Thanks,
I
Alex.
agree. That's
Thank
the one I started off with as well.
All right, gents, the time has arrived to announce a winner of that 5K Forex Challenge account. So, guys, if we can get a bit of a drum roll in the back there, the winner will be popping 3, 2, 1. Today's 5K Forex Challenge account goes to Followers. You are today's winner. Congratulations, followers.
Well done.
You followed all the steps necessary, and it's as easy as that, guys. Again, from our side, good job, good job. I really hope that you treat that account with respect, right? So Not use it as a gamble account. See if you can pass the actual challenge. There's one more step that you actually do need to please go and do is go to our Discord channel if you haven't joined already, and you have to go to the hashtag challenge, I believe, server within Discord, and there'll be some more steps you need to go and follow over there. It's just basically to do with claiming your account, right? So you will also obviously get your login details and all that stuff via email, so we'll be reaching out to you. Again, if you've got any questions or trouble setting up these accounts, again, probably Discord will be the best for that. You can just reach out to our amazing support team. They do answer really, really quickly, and everyone's there to help. So, again, congrats from our side. If you haven't won yet, guys, do stay tuned, right? Unfortunately, you can only pick one a day. But, yeah, come back tomorrow. Who knows? Maybe tomorrow you'll be our next winner.
Yep. Congrats.
Cool.
Hey, gents, you can give me 2 minutes. I'll be back.
It's all that water you've been drinking, Tiger.
I know.
The massive jug.
He's laughing at me while he's walking away.
Yeah.
Yeah, congrats, followers. Okay. Good stuff. By the way, in the chat here, who's won a challenge account already? How's it going? Did you actually make it, pass it? Unfortunately, break one of the rules, or are you up a few percentage points? I know, was it Samuel that was up 3%? It's always great to hear. But guys, if you're a beginner trader, don't feel bad if you did not make a challenge. These rules are there for good reason, right? We want to see who's consistent, who can manage risk properly, and all that sort of stuff, right? Who's in there for the long run rather than, the short term. I want to make quick profits. And just try again. Keep on trying. That's obviously why we're here as well, trying to get all your questions asked. Try to improve you as traders, and try, help you as best as we can. So we've been having quite a busy session today already. Lots of questions that's been coming in. Always great to see. Again, guys, this is all for you guys there, so please share our channel far and wide with everyone that might be like-minded in the trading field, and keep coming, guys, keep coming. We'd like to grow our channel as much as possible. All right, again, congrats, followers. Mr. Peeps,
I can show
Mr. Peeps, you are late. What time is it there, Mr. Peeps? Almost I was taking you out already.
Yeah.
You want to switch over to your chart, Tiger?
Yeah, I do have a potential setup. I'd still got to wait on price to come down to my zone, but just taking a look at the Nikkei, the Japanese Nikkei. Now, it is a neutral score, but it is a 4. So it's right there on the verge on a small time frame. That's close enough for me. So looking at this thing on a 15-minute time frame, or no, I'm sorry, I guess that wasn't 1 hour. So it's a 1 hour, but you could look at it a 30-minute, 15-minute. There's zones all throughout that. So let's see here. So what I like about this trade, this potential trade setup, is exactly what I mentioned earlier. It was strong enough to break through and close on the other side of a very strong demand supply zone, I should say, because that's about as strong of a down move you can get right there. So now that I know that's old news, I'll get that out of the way. But we closed above it, just barely. It just takes a little bit, but we closed above it. So there's 2 zone options here. Now, this demand down here has been touched, so it's been mitigated. So prefer not to touch it. So at that point, it closed the gap that we had, and we filled the gap. So there was the gap right there. Okay, but we've come down and filled the gap, touched the demand. So that made this price action, what they call efficient. So we just keep going until we find the next inefficiency. All these candles are overlapping each other until we get to here. So this is my new zone. My new gap, I should say, from here to here. Okay. So since I know that that demand is the one that pushed through that overhead supply and closed, well, that makes it attractive. And then obviously you look at it in the grand scheme of things, it's just an overall big, nice, happy uptrend. So now what I want to look at is just going down to the smaller time frames. Okay, 15-minute actually. So we got a double bottom. Okay, that's a double bottom right there. That's excellent price action because that means you got buyers here, you got buyers here. They're putting their liquidity up under here. Okay, they're putting their stop losses down in this area. Okay, you know, give or take a handful of points, just depending. But there's stops all throughout this area. Okay, their stops are sell orders. So the banks collect sell orders to fuel their buy orders, collect unfilled orders from the zone itself to push up. So I've got already all I need to see here to feel pretty confident about just a simple drop in price. So yeah, here we go. So yeah, just a simple drop below, collect liquidity, push up, and then sell just ahead of this 5-minute supply zone right here. Okay, it's at the origin of the strong move down. Again, if I'm buying in demand, I have to see a temporary small time frame downtrend, right? So it's counter trend technically when you look at it that way, but I'm looking at it in the context of the higher time frame trend, which is up. Also, what I like about the demand zone was the volume. So, you know, you got the big volume spikes right there. Huh? That's institutions. They're the ones strong enough to make a big expanded range move like that, expanded range candle move. So that's my current setup. Just basically waiting for price to drop in. So we'll see if we get it for just a simple trade. So I would imagine, and hopefully, we got some wicks on top of these candles. So that's selling pressure. That's what I like to see. Selling pressure to push it down in. So yeah, this double bottom makes that real attractive. I mean, it looks even better when you look at now this is volume, of course, but then you look at the VSA on that same thing. VSA, here we go. It looks a lot nicer because on that zone you can actually see what I was talking about earlier. Big red candles, right? That's institutional activity right there. Right? Pushing price up. Again, they're pushing it through that overhead supply, closing on the other side. So in my opinion, that's a great institutional move. So I'd be, just simply waiting on alert to get hit again so that I can go over here and market order it. But I do want to keep an eye on it. I mean, I could, this is close enough to where I would almost be okay with just a simple limit order. But, since I'm here anyway, I'm just going to watch it. Now, if I were to step away, like if this move happens after I step away, maybe go grab breakfast here in a little while, whatever. Well, yeah, I'll be putting in a limit. So I'd feel pretty confident about that on the Japanese Nikkei. Cool. So, but yeah, it's given me about everything I could ask for. Gap, expanded range candle, breaking and closing on the other side of an overhead supply zone, volume spike. The RSI is under the 50% when that zone is created. I like to see that. As close to oversold as possible when it comes to the creation of that zone. Right. So that's just like 5, 6, 7 different things that I like to look at. Odds enhancers. Right. Supply and demand is my ultimate reason to get into this trade, but it's nice to have all the other odds enhancers just to kind of verify that it's a high probability trade. As always, never a guarantee, right? But 60% of the time, I know I'll lose. It's okay. When I get to 40%, that's where I like to get these nice little. Let's just say I put my stop here. That's about 140 points. 1530, 1530. Yeah, it's about a 3-to-1, something like that. 3-to-1. So, yeah, that's just a little update on what I'm looking at there. I'll just wait on my alert to yell at me and scream, and we'll be entering that trade.
Very nice.
All right, Mr. Peeps. Won a challenge 6 weeks ago. Never used a proper phone before. Bit of a learning curve, that's for sure. Oh, wow, but up 11%.
Hey.
Very, very good. Better than
That's
that
awesome.
measly,
Amazing.
what, 6% per year that the bank gives you. Or even less in some places.
That's
Yep.
awesome.
Samuel Trade, yeah, up 3%. 10K two-step prime account. Holding the DAX. Perfect. Nice, nice. Followers, yeah, just reach out to our the guys in Discord. Our support team will get a hold of you. Might be a bit quick to immediately go claim it right now. They have to do a few things on the back end as well, but yeah, see what they say. Generally wait until after the Forex Fire session before doing that, but let's see.
Good stuff. I like seeing those successes. Those are good. Yeah, I was looking at silver. So we do have a demand here, but the big problem with this demand zone is the momentum coming out of it.
Zagnut.
Big spike down, but then lazy momentum going up. Now it looks like it might want to close above, but it's too lazy a momentum, right? So that in its own right, plus the negative divergence on RSI, that's enough reason for me to get that demand, right? So I just wanted to show everybody that this is what I mean when I say momentum. When your down move is stronger than your up move, because that down move took about 30 minutes. But this up move to cover the same territory, well, it took a lot longer. 25 times 5, whatever that is, minutes, right? As opposed to 30. 200, I don't math. 150 minutes or something like that. 200. So for that reason, I'll negate that. Now we hit oil. We did hit our oil demand. So let me look at this for a second. Okay, let me go back and take a look.
Big range.
Yeah, it's a big range.
Yeah.
Let's see here. Awesome that we had like 6 green candles in a row. We had a gap above it on a 1 hour. Same thing on a 4 hour. Big gap. Now, the only nitpickiness I want to do is the fact that when we did have this push up, we weren't able to close over here. But we did eventually get there. I think I already talked about this earlier. So at this point, I'm going to watch this and see if I can get that price action, that confirmation price action I was talking about. Right? This is basically what I want to see at this point. Okay, get a demand here, bounce off the demand. I've broken. I want to see the break of structure. Right? I want to see that break of structure. So now it's going to be kind of tough to pick it. So I just basically need to wait on the leg out. And if we don't get the leg out and it chews all the way through, well, good. I've stayed safe. But at the moment,
cool.
Yeah, just need more information. So
Tiger, there's a question from Mr. Peeps there for you.
Oh yeah, let me just throw this alert on. I'll take a quick peek at it. I'm just going to throw an alert just in case price comes up to this area. That way I'll know to look for the retracement back.
No worries.
Okay, so I have an alert. And then, if I don't hear an alert, well, that just means it chewed through and saved me from a bad trade. Coach Tiger, do you find the supply and demand zones lose their relevance the longer it goes untouched? I mean, I prefer them to be, fairly close. Like if you just go and just whatever reset your chart. Okay. I think TradingView kind of defaults to 200 bars. So let me just count this real quick. It'll tell me. I don't have to count it, but so okay, so about 230 bars, right? But you basically kind of want to look 200 bars back, regardless of what time frame you're on, right? So there's about 200 bars right there. I would prefer my zones to be within that 200 bars. Again, it doesn't matter if you're looking at a daily chart, meaning 200 days back, or a 1 minute chart, meaning 200 minutes back. You know, that's ideally what I like to see as far as getting into a trade. Now, as far as a potential take profit, hey, I'll go back as far as I need to. Okay, now now on this particular chart I was looking at on a 4 hour. Okay, so we're not even that far. That's not that many bars. That's whatever, 40 bars, something like that. Okay, so this obviously fits within my realm. I guess I could just calculate it. Yeah, so 38 bars back, right? So this is an easy, absolutely, yes, I want to buy or use it as a entry. If it's way the heck back here, way over 200 bars, probably not, unless I find, unless that price action looks good on a daily or a weekly even, right? But yeah, ideally, I mean, and this is exactly what I was trained as well, and I feel like it's a pretty good thing. Yeah, just kind of use the rule of 200. So for me, buying and supply and demand, yeah, I prefer it to be within 200 bars. And that's the beauty of a lot of these charts that use TradingView is you got your little ruler tool there, so it'll tell you the pips or the points or the ticks, depending on what market you're looking at. It'll show you the percentage, increase, decrease, the actual day. So right there it says 4 days and 8 hours. It has volume on there, but it's not really the greatest as far as the Forex market, obviously. But but yeah, I would say within 200 bars. Hopefully that answered that just fine. But as far as take profits, no, I'll definitely keep an eye on older zones, just because you just never know. I mean, the big banks, they'll look back. Hell, I've looked at. You guys saw me earlier this morning to start the stream. I think I went all the way back to 2011 on one of them, right? Yeah. So I don't want to say they lose their value, but they're probably not as high a probability, because obviously ain't nobody going to be leaving a limit order in for 14 years, right? That 2011 one. But flyer zone, right, is basically
Someone forgot their limit order there 14 years ago.
Yeah, you're right. Yeah. But it's still, obviously I look at things through the lens of supply and demand zones, but they're usually right there in and around a support and a resistance line as well. So what looks like it's a mile back, you turn it onto a monthly chart, it's not that far back at all, right? Or a weekly chart, right? So it's always good to look at the higher time frames. I mean, I do that now. I try to make sure if I'm buying, I'm trying to make sure that I'm not trying to buy in the middle of a weekly or a monthly zone, opposite zone. So I actually have a good example. I can't remember which market it is off the top of my head, but I've actually got a weekly and a monthly. And I always color those ones. Yeah, here we go. All right. So here's a monthly, this is a weekly. Yeah. So here's a weekly demand zone, right? Same thing rings true. Gigantic spike up. Okay. Big volume spike, right? Very important level. If I have price coming down into the zone, and let's just say the fundamentals on this market's telling me that it's bearish, well, I'd be afraid to listen to my algorithm, because I'm sitting in the middle of a high time frame demand zone. So it's always a good idea just to be aware of where your higher time frame zones are, or support resistance, however you want to look at it. just to make sure you're not trying to you're not trying to sell in a weekly or a monthly demand, or you're not trying to buy in a weekly or monthly supply.
Yeah.
Right. So that's really, I guess, the best way to explain that is just make sure you're not bumping into something heavier, because the monthly is going to be stronger than the weekly. The weekly is going to be stronger than the daily. Daily stronger than the 4 hour, and so on and so forth. Until you get down to the smaller time frames where all the noise is at, right? Anything can happen on a 5-minute time frame, 1 minute time frame, 15-minute time frame. But the higher up you go, the more relevant they are, just in terms of, strong areas. It wouldn't be a supply or demand zone on a monthly or weekly if it didn't have a big gap down or gap up. So it's showing strength there for some reason. So we just want to be aware of it. Try not to be, slapping a sword over an anvil, so to speak. All right, so currently that's my number one setup if I can get price to come down here. But as far as some other alerts go, oil. Okay, so I'm keeping an eye on oil as well. So like I said earlier, I'm just looking for that. All right, so we got to push up. So I just need to see price come up, come down, even if it wants to give me a double bottom, right? I would prefer it to come down and then obviously have a break of structure, just like I drew here. Right? Double bottom is one thing. And if I get a double bottom, well, I still want to see that break of structure. But double bottoms can very easily get tapped again to collect this liquidity. So that's kind of the thing to be aware of. If I get a double bottom down here, right? Well, that's a sign that the banks may want to sweep that. Going back to the ICT question somebody asked, right? I have to be aware that they may throw another leg down there to collect this liquidity before making the ultimate move up. So that's why when I draw this, I draw it like that, right? A low point, but then a lower low. Right? So I have to be aware of that here. If I get this price action, I'm golden. If I get this price action, I have to be aware that they might try sweeping it again. And they could obviously just keep sweeping and keep doing lower lows and just, go all the way through. But if I don't see that, ultimately, if I don't see that break of structure, easy excuse for me to stay out of this trade. So
okay,
just need more information, right? The patience thing that we talked about earlier, that we beat to death, right? It'd be easy to limit order this because it is such a strong zone, right? That's beautiful right there. I mean, that's beautiful. But again, I try to find reasons not to get into a trade, not reasons to get into a trade. It's the process of elimination, right? And so far, the only thing I've found that's eliminated, again, is it did not break the structure until way over here, right? But since that's the origin of the strong move, I still feel the best about it. I just got to see a little confirmation because it did not break that structure and close above it. But one other thing I want to point out, and then I'll be done with this one. So obviously, you guys see the strong move up. That's perfect. The move down, again, it's more gradual. Okay, it's more gradual. It's not like it's just screaming down like this up move was. Like if I was getting this price action, this down move, I'd probably be a little more leery about even getting into it because that's heavy momentum down. And then this is heavy momentum up, comes down, but then it starts to slow down momentum, and then you get another heavy momentum push up. But you don't really see any gigantic down moves. You see just a lot of wicks and a lot of more gradual move. Right. So that's a little more lazy. This makes me feel like it'll curl around a little better. Now we did get a pretty strong move down over the last couple hours. So that's why I'm making sure that it proves itself to me by giving me this reversal type pattern. So yeah, that's enough on oil. Got my alert set there. Looks like it might tag me in a minute. Yeah, if it tags my alert, I'll just set another alert just to make sure that I try to get that price action.
Hey, followers, are you asking a question there? You help with anything?
I'm happy to go over my charts.
You're wondering if you
Yeah.
want to take a trade or not. Help you making money.
No, absolutely.
Yeah,
Absolutely.
cool. Let's go over that back end when you're ready. 100%. There we go. Cool.
Mr.
All
Peeps.
good. Okay, we're all set.
Yeah. Good stuff, Mr. Peeps. I was just admiring your time frames you mentioned there. No, I like it. That's good stuff.
Okay.
Sorry, Alex.
Nice. No, you're fine. You're fine. It's easy. I thought whilst I was here, the markets aren't going to do anything. They're not going to do anything this next. Well, I should say they were not going to do anything, but I doubt they're going to come down to the VWAPs again. They're just going for it. I mean, oil's no. If it comes all the way back up here in the next hour-ish, I'll be very impressed with that one. But I think I talk about this quite a lot, and then I realized I haven't. I saw someone ages ago talk about it in the chat, and I wanted to go over what impulsiveness means, especially for scalping, because I think it was really good. I mean, Tiger, you've talked about it. Richard, you've talked about it through here. We've all touched on it. Having that confirmation of direction, not just looking for things like, I can't remember what you're calling it, but that lazy directional movement and wanting to see some volume or something. Now, I think we're all looking for something to be like, hey, let's hop into the market. And for everyone watching or, just trying to get their own strategy off the ground, I think it's such an important thing. So I'm going to go over that here for what I look at specifically. So when you hop into the markets, you can go, oh, I've heard Alex talk about this, or I've heard Tiger talk about this. And when you see it in the market, you can start to get your gears turning and go, okay, I understand what's happening here. So really, the way that I look at it for anyone wanting to be a scalper is we really look at just impulsive moves. This is just a huge thing, even a cornerstone of the scalping market. Sorry. The cornerstone of the scalping market is just impulsive candles. Now, what does this really mean, and what does it signify? An impulsive candlestick can be measured in so many different ways. You could be looking at it from the size of the candlestick, to whether it's engulfing. You could be looking at Tiger's volume charts, for example, and seeing how much volume is in that candlestick. It could still be a large one, but maybe there isn't a lot of volume in it comparatively to other ones, and therefore you stay out of it. But for me, that confirmation bias not only comes from retesting the VWAPs and all these things, but the most important, how should I put this, entry rule is that impulsive candlestick, and not just any impulsive candlestick, an impulsive candlestick in the right market conditions. AK for me, being outside this area, you can have impulsive candlesticks literally anywhere, large ones filled with a lot of volume, engulfing candlesticks, etc. But it's looking for that in the market condition that you want, because we're really looking for the market with these specific candlesticks to say, hey, the move is on. Without that, especially as a scalper, but really with anyone, you can just be dead in the water. Without this particular candlestick here, this strategy would not exist. We wouldn't have hopped in, and the market didn't signify at any point that it wanted to really do anything until here. From here, we took off. This is, even though this might be Genesis here, Genesis is not confirmed until we have this point. The trade actually starts for me here. The move might have been created here, but it starts here, and it's so important. Realistically, again, without it, we don't have anything. If it turns around, whatever happens afterwards is secondary. So I would be looking for... Yeah, go for it.
Sure.
With any strategy is to have this confirmation of movement. So for me, especially when you're going to be looking, if you're joining on the Mondays and the Tuesdays, which is when I'll be here, obviously with Coach Tiger every single time, I look for number one. My favorite one is an engulfing candlestick, because we're just taking out all these orders or all this liquidity. We're eating up the market wherever it may be. Now, this one wasn't it in this particular case, but I think we had one over here. Let me just check. Might not have been that one. Let's go into this area. Yes. So if this had just been slightly larger in this area here, if this is one candlestick, let's imagine that for a second, we'd be engulfing because we're just taking out everything to the left of us. Now, I know that's not what it is right here, but we're taking everything out. And if it closes down here, that's what I love to see. Not only are we eating up all these orders, but we're showing the confirmation of the direction that we want to hop into. And that's really what I want to look at as a scalper coming through here. Because if I'm taking out all that liquidity, chances are that's just fueling, right? And this is what I love with impulsive moves, especially on the scalping types. It's fuel for the fire. We're taking it out. We're taking all those orders. We're engulfing all those candlesticks. And that can really push as hard as you can for those moves to the downsides. Now, we didn't really get it here. We got more of an impulsive move just coming out. Not the cleanest, but definitely this one is a great impulsive candlestick. We clear the entire area, essentially. This one, not breaking out, not that large. And then as soon as we come out, we've eaten these orders. And then from there, we move up into the market. So if you are looking for a really good confirmation for really anything, look for these engulfing candlesticks. Look for these big moves, especially when you couple volume to it. It can be super, super, super helpful. For example, this one here, a little bit different. I didn't like the impulsivity. Yes, we had this big move. It was more or less 2-3 candlesticks green. We had momentum rather than the impulsivity. And then, if that's a word, and look what happened, a break-even trade. But when we had these larger candlesticks being formed in this area and this area, and could just be a coincidence at this point, but you can see how quickly these moves took off, how quickly this move took off in comparison to something that wasn't the same. And this one took a whole lot longer to do what it needed to do, and it messed around for ages. And you can see it's eventually gone up, and it might be part of the market through here. But have a look at these markets. Yes, it ranged through here, but we've had some massive movements in this area. And if I go over here to oil, it's exactly the same thing. This has just been incredible tonight in terms of how bearish it's been. And again, if you want to look at an area, I would literally be looking for this candlestick here. So if you are, again, looking to hop in or create your own strategy and you're going, or just simply going, where's this confirmation bias? How do I start to understand where the market wants to go? These moves. Of course, we've got the VWAP and stuff in there as well, and that's part of my strategy. But just as a starting point, go ahead and backtest it. Have a look at these, find engulfing candlesticks and these moves, especially with orb. It's super simple and hard. So the opening range, right, with breakouts. If you find these opening ranges and you try and identify these moves, even on the 1 hour, 15 minutes, half an hour. I know Tony does for the futures market. He does multiple of them. He does multiple time frames, just like me. There are many traders that use this. You're going to have a really good look into the markets. So with that, I think unless there are any questions, that's all I wanted to go over in terms of this here. Fill up a little bit of time for us before we head on out.
Yeah, I love engulfing. That's one of my favorites.
Mm-hmm.
One of my favorites. Just
peering through. Just quickly ask the same question again. The opening range for you, 30 minutes, right, Alex? Starting at what time and ending at what time? Because you're sitting there in the different time zone, and Richard's brain is so small with all these different time zones that he doesn't even know where he is on Earth anymore. Sometimes. You being in Australia, you're looking at a 1 minute. So that gray box there is basically your 30-minute range, right? And then the red after that to the right, it just extends it during the session. Am I right saying that?
Yep. Yeah, exactly right.
So when
That's
does
where
it
we are
start?
currently right
Eastern
now.
Standard Time? And when does it end? Well, it
Say that again,
starts
sorry?
for 30 minutes, right? When does your opening range start?
So 5 p.m. for me. So it's 9 p.m., 9:44 right now. So 5 p.m. all the way till 5:30. That's when it switches over.
Okay, so I have to still do the conversion then.
Oh, I could try and find you on here.
So you guys,
Oh,
Australia is so big, right? Doesn't
Johannesburg.
it also have different time zones? Or you just
Yeah,
have one time zone?
we've got three different time zones
3?
in
Goodness
Australia.
gracious.
Yeah.
Oh wow.
Yeah.
Yeah, I guess you do, don't you?
So- yeah, we've got
One.
the middle. The middle of Australia is 1, so that's an hour separate from our eastern board. In the middle, it's 1 hour away, and then all the way in Perth, I believe it's 3 hours. I think they're 3 hours difference from us.
I'm going to look at time, buddy.
we-
So which city are you in again?
Oh, well, this is yours here. So I've got Johannesburg on right now. I've just switched it across. So that's 9 a.m. 9 a.m. till 9:29. Your UTC too. Yep, Johannesburg here.
And
So,
for
9 a.m.
what's his name? Eastern Standard Time, that will be +4.
Yes,
-4,
where
sorry.
is plus?
That's up,
-4.
up. Sorry, -4.
New York. That is 3 a.m. till 3:29.
Okay.
That's it.
Good, gotcha.
Yeah,
Sorry
that's
about
it.
that.
No, you're
we
right. I have no idea where Sydney
Million
is.
time zones. We got
I
3
like
on the
that.
mainland too, but Hawaii and Alaska.
Yeah.
You include that, we got like 7 time zones, I think it is. Ridiculous.
Yeah, it's a bit like
Alaska's
that. But yeah, that's it. That's when I say the London session starts, and that's how it goes. That's how I've always done it at that time. Obviously, you got to factor in daylight savings, which is coming up next month in October, the double, because we have daylight savings, and then you guys in America have daylight savings. Yeah.
Yeah,
So
guys
it's
in
a
America,
double.
when is that? Isn't that November?
I think it's in October for us. Yeah, so it should be
October,
coming.
Yeah.
I believe so.
It's
All
like
back,
14
spring
or
forward.
something like that. Mm.
Yeah, hopefully they can get
Yeah,
rid
I
of
hate
it.
it.
I don't like it. I
It
think it's
sucks.
ridiculous.
Why we have it?
Okay.
So annoying. Like,
Well, they
it
claim
doesn't make sense in Australia. Sorry,
Yeah.
Don?
Yeah, they claim that they said it that way because obviously to give you the extra hour of daylight in the evenings, but also when it gets to the winter time, they don't necessarily want kids going to school in the pitch black. So, like for a big portion of the country.
Shame.
So that's
My kids
part of
go
the
to
reason
school in the pitch black in winter. We don't mess around with the time zones. You guys need to toughen up a little bit.
I'm tired of it too. No, I'm with you on that. Like, come on, Trump, sign an executive order or something. Speaking of,
2nd of November, guys.
Okay,
when
yeah,
you
that's
do the switch in the US, so it's still wells away.
Oh, okay.
2 months.
I got you.
Well,
I was just
not 2
looking
months,
at
month and a half maybe.
I was just looking at some news. So let's see. I saw something on TikTok here a second ago. Where was it? Oh, Trump expected to approve
believe
TikTok
it's
deal
TikTok?
via executive order. Via executive order, declaring that it satisfies the requirements of the law later this week. So it looks like he's signing an executive order on it. How interesting. And then Oracle. So the company Oracle is actually going to be securing the algorithm for it. Oracle, of course, is that company that jumped, what was it, like 20-something% a week and a half ago, I think it was. We finally put
Must
that
be really
to bed. That's
trustworthy
been like,
if it's Oracle.
I guess so. Everybody, they keep doing the 90-day extension. It'll be nice to just finally get that thing sent to bed. Yeah, I was just looking to see what else we had. Interesting stuff. It's pretty much up to date on the financial juice side of things. Monday price. Okay. Anyway.
Well, maybe there'll be one last hurrah on gold. Potentially, we'll have to see what it does when it comes down here and hits the VWAP. If it does, it might decide that this area is going to be. Oh no, it definitely could come down around here. We'll have to wait and see. Again, if I do hop into a trade, guys, in this last 25 minutes or whatever it is, I won't actually be hopping into the trade. I will be leaving this alone, even if it does set up well. I'll be leaving it well alone. It is very, very far away from the range. What's that?
So you'll take that trade based on the VWAP as well, a retest of the VWAP. So not just the breakout of the range.
Yeah, once it's broken out, I will have continuations onto it. However, it is an absolute distance away from this range. Usually, I like it to be a bit closer. Have an initial move up like we do through here. And then maybe come back down and retest like near it, and then just continue that kind of move through here. That's a lot rarer, but usually I do get 2 moves in. That's usually how I get 2 or maybe even 3 trades. Is a move like this, hop on the first one, the initial breakout. It'll then come back down to the range again, or the VWAP, and then push off. Obviously, it didn't happen in this one through here. But yeah, I definitely will do it. This, however, is, as I said, it's so far away from the range that it's way more likely to just break through. I will take it because of my rules, but again, well, no, I'm not taking it because I've already had enough trades. Technically, with my rules, I can. However, I should put it out this way. This happens so rarely for my strategy where it's this far away for me to hop in. I really don't have that much data on it. So I could easily leave it and go, yes. However, around this line even, the first 50%, I'll take it. I'll hop in around here. But being in this T2 area, the secondary line is very, very rare for me. That never happens. So I might have only taken 6 or 7 trades in the 2 years that I've been trading this, literally where it's at this level. Usually it is that really nice build up through here, those pullbacks coming into the area, testing it one more time, shooting up. So we'll hop in here, but again, around here, no. But it actually fits all my rules. I just don't have enough information on it. So probably another reason why I wouldn't hop into the trade.
You've done well already. Let it be. Put it to bed.
I'll put it to bed. Leave it alone. Don't touch it. If you have a DGen account, this is exactly what you use it for. We'll put the house on it. Don't do that, everyone. That is a joke. Do not do that. Do not follow me. Leave it alone.
Exactly. Michael's got his DGen account. He talks about. Yeah,
exactly.
Anything
right.
Nothing setting up at the moment. This has been like watching paint dry. Yeah,
it's been quite Monday.
Is a Monday.
Yep. Yeah. Yeah. I mean, my favorite day of getting trades is Tuesdays anyway. But even on the 5-minute time frame, I mean, I'm not picky at all. But yeah, just not having anything set up at the moment. I'm just digging through all my markets here. All my markets.
Yeah, well,
to show some examples.
Yeah, where did I have anything particularly last week that was amazing? I think I had a good trade on Friday. I just can't remember which pair it was. Oh, which one was it? I don't know if it was gold. I'll see if I can find it. It was a really good example. Saturday.
Yeah, I had 2 gold ones last week. for myself.
Oh yeah. Were they decent ones?
I mean, I followed all my rules.
Yes. Here. This is a very, very, very nice one again to the downside if you're looking for a really nice trade from me. And this happened so quickly, literally from the range being formed, from the half an hour ending. You can literally just see it came down, it hit here, and then we just break down. And again, if we're talking about that impulsive move, now I didn't hop onto this because it hadn't already broken out, right? It hadn't already broken out, so I couldn't do it. I left it alone. However, in terms of just the market structure that I love to see, this is perfect. This is the Asia session VWAP through here. Touched it perfectly, and then just came straight down. You had that impulsive move. Wow, brilliant. Really nice candlestick. It basically came up and retested this area, and then from there just straight down, just straight down, and it just floored. Yeah, just dropped it, and I was like, damn! If only you just broken out once. If only you just done this. But again, guys, you know, I missed out on this trade, and I remember sitting there and thinking, oh, I could have trailed that stop loss. It would have been fantastic. But as I said before, you know, there are multiple points.
That's what I was
going to
ask. Do you take full profit at your target, or would you sometimes, you know, trail and see if you can squeeze a bit more?
I will trail. I definitely will, only if it's looking really bullish. However, otherwise, which isn't the majority of the time. The majority of the time, I do take out full profits. Like this one, however, you know, I would be looking at a trailing one because obviously we were going. Well, no, I didn't do it on this one. If it had just come up and just continued like this with these large green candlesticks, absolutely. But as soon as we kind of start to lose that momentum, I'm out.
All right, so it depends on the price action.
Yeah, exactly. If it's just looking bullish, as bullish could be, I always err on the side of caution. If it's looking fantastic, I'm going to hop in, but only if it's looking fantastic. Anything else like this, no. If it had continued its move up where it's really strong and just continued, yeah, 100%. I absolutely would have been trailing it, but no. I mean, the only other thing that I do at the start of every session, and this is a much longer term play, and I wouldn't recommend people doing this unless they have a larger account, is I will place a secondary position just like this, and I will just let it go, and I will not exit the trade until the end of the session. Realistically, I'll just let it fly. Obviously, if I then form, you know, double tops, that's something that I will say, yeah, I'm hopping out. I'm hopping out. But like, for example, oil, I'm still in this.
I mean, as of late, crude oil and as well gold can really freaking run for the entire day.
Yeah, no. Oil, although it is, as Tony called it, the red-headed stepchild, it moves when it wants to be trending. Oil, for me, is one of the best pairs. When it wants to trend, and gold too, when it wants to trend, it just goes. And now this might happen 2-3 times a month. But if you look at what we were hopping into previously before, this is where I hopped in. And this is... Now, with this trade, I put on barely any risk. I put on barely any risk because it fails quite a lot of the time, or I'll just go to break even, right? This is not a large, successful trade. I might have a 20% win rate. Realistically, that's what we're looking at through here. But right now, I've had absolutely no reason to top out the market. It hasn't formed a double top. I'm sitting somewhere down here. Now, if this forms a double bottom and starts to go up, yeah, sure. But that's a 1 to 7. You know, I'll be going for 1 to 8s, 1 to 9s when they do go through. Now, again, we're looking at something that is a 20% win rate, maybe even 25. But right now, through this, obviously I'm out on this one right here, and I hopped out of this one as soon as this double top formed. Out for both of them. That was a smaller play through there. But oil, that's nice, but I will risk a lot less. I might
Pedal to the middle, crude. Jeez.
Yeah. So just let it go and let it run. If anyone's ever looking for a good trend trading one pair, oil can be it. It can also be the most annoying pair in the world for me.
When it
When it wants to range.
and starts ranging, it's,
Yes. Yeah. For days, for weeks. Sometimes it'll just go, no, I don't want a bar of it. And then when it moves, it just goes, yep, I'll do that for the entire session. It can easily do that. And that's why, for everyone watching, I have such a low win rate on this. Not usually losing, but usually coming back to break even. That's usually what I'm sitting in through here. Now, I will take those losses, definitely, as well, but I'm looking for something big. I'm not looking for something small on these moves. I'm looking for the bigger ones, and that's where my win comes in. If it's a 1 to 3, I won't even be taking it. I'm going for 1 to 5s plus. So, yeah. But obviously, that's not something that I would necessarily put on here for you guys. It's not beginner friendly. It's really not. It requires. If we were talking about patience before, this is a big patience play. You got to hold your nerve, especially with some of these things here. This can be really upsetting to some people when you get your double tops to range and you hop out and then it shoots up. I've seen a lot of people just have FOMO, etc. And I definitely wouldn't be suggesting that, you hop into trades just presuming that this is going to happen. A lot of people aren't particularly good at losing more than they win. And this certainly...
right?
Yeah, exactly. But if you've looked at me... Yeah, exactly. Every Monday that I've been on here, every Tuesday that I've been on here, this is the first one that I've won. So that's like weeks and weeks where I've been sitting here and I haven't won a single one. It's just come back to break even on every single one of them. And I've lost 2 of them because I've lost someone here as well. So, there is that. I've just break even trades, losers, nothing. And now I've got this. Yes, it does make up for it. Yes, it does bring me into profit, but not extremely so. It's not like, wow, he's just made 7%. No, I've broke even and I've lost some trades. So this is just slowly over time bringing me up to where I need to be. But you've got to be disciplined with this one. You've got to be disciplined because you need to be going for a longer R&R. Your brain will be screaming at you at some point around here with every little pullback. Get out, get out. I know my brain was when it came through here. And now that it is forming this double bottom, probably in the next, I'll probably be hopping out at the end of this candlestick, most likely, unless this one goes down, I probably will be. But I've had to hold on to it. Yeah, this is why these. So, yeah, a bit of a lesson one that's watched.
Steps.
That's been pretty good.
Yes, yeah, that's me done. It's me done, I reckon. No more trading. No more trading for the day. Technically, that is a retest. I would count this, but again, we're not hopping into this trade, and it hasn't broken above these lines. So leave this alone. Leave it alone. Anyone can take over now if you've got anything that you want to look at or anything you want to talk about. I'm good for my charts.
Yeah, guys, we got 13 minutes or 12 minutes or so left before the end of the session. Tiger?
Still keeping an eye on
going through that?
Nikkei and that oil. Yeah, I'd like to see that. Just still looking for a little bit better price action. That's it. I've been looking through all these other markets. Okay. And just by the way, the final session movie looks like Mission Impossible. Tricky Setups won out 40%. Yep, gotta agree. Definitely been a tough one so far. But oil, I mean, again, it's dropped into that demand zone I want to buy, but the problem is it's forming that double bottom. So like I showed that example earlier, I basically need to break a structure and need price to kind of revisit, sweep out liquidity, so I can hop in this trade. But yeah, this is where the patience really helps. I mean, I'd have been in this trade in the old days just by it touching. But yeah, sometimes it can be like watching paint dry. Now, I like how the divergence on the RSI is turning around to the upside slightly. I mean, it's nothing major at this point, but we are getting a little bit of a divergence on a 5-minute time frame.
Do you want to switch your chart?
Oh yeah, sure.
Like,
Yeah. Let's go ahead and go on over here. So yeah, I mean, like Alex was just showing, kind of getting that double bottom action right now. I would really like if price would come down a little more before, well, just basically what I drew here. But as you can see, and this is why I drew this example above. I mean, this is basically what we're getting right now. Get rid of that. Get rid of that out of my way for a minute. Right. So, we basically had two options, but we're getting this one. So that's why I say, anytime a double bottom is created, that the banks are the smart money. Let's say the smart money, right? Smart money is licking their chops. Right? They're licking their chops, so they go sweep it. So, yeah, just trying to be patient here. I mean, it's tough to do sometimes, but it's definitely worth it and definitely necessary. But yeah, that's oil, and then it's still just kind of waiting on the Nikkei option to shape up. But as you can see, it's kind of doing its sideways thing. So again, it's getting that double bottom, and I feel pretty good about the liquidity buildup under here. So whenever the heck it decides to do its thing, I'll be here. Ideally, I'd like to have it from where it's at. I'd like to ideally have it, make another little high over these wicks before coming down, because that's where the master pattern really kind of takes over. Meaning the contraction, the expansion legs, right? And then ultimate trend phase leg. That's what I would like to see if I had my wish list. If I were writing a letter to Santa, hey Santa, on Nikkei, can you please just give me one more little higher high, and then another lower low, and then I'll buy them, That's what I'm looking at. If I had my wish. Because we're getting this little bit of liquidity buildup right in this area. And of course, that's buy orders, right? Buy orders, sell orders under here. I mean, I just love this liquidity buildup. It's great. That's obviously going to be a red box. So that's what I'm waiting on. But yeah, other than that, Michael will be happy to know when he comes back tomorrow, Richard, he'll be happy to know that Euro Pound is on my bearish bias. He's been trying, Alex, to recoup his money that he lost on Euro Pound, 4 weeks ago at this point?
Yeah. He doesn't forget.
Every time. He does a deep dive on all the currency pairs, and when he does, he gets the Euro Pound, and he's like, and this pair still needs to pay me back my damn money. It's so funny. I'd really love. I would like to sell this market, but the problem is, I think we had a fairly efficient market price range.
What is that? Euro Pound?
Yeah, Euro Pound. I mean, we do have a little bit of a. Let me look at this market.
Are you going to range trade for him?
Do it.
Nah. Well, it made me money here about the same week, I think. The same week he lost his money, I actually made money on Euro Pound, but then I got greedy and I tried to hop back in a trade like that same day or the day after and had a small loss. So yeah, but that was my fault. I got in right ahead of a news release, and I was expecting it to do one thing, and I got humbled really quick. So I had a nice small little loss. Nothing too. Yeah,
not good play.
I think it was because sometimes the red folder events on Alex. I don't know if you've noticed this, but I use Forex. Oh my gosh, Forex Factory, and
Yes, same.
sometimes, okay, so sometimes what shows as a orange folder, if you go look at like Rebate King FX's economic calendar or FX Street's economic calendar, they'll be red folder events.
Mm-hmm.
So
Yeah.
I've noticed that, and I had one confused. I think it was on that day. So basically, ignored a red folder event because it was showing as an orange folder on Forex Factory.
I get it. Yeah, I think there's only one red news folder that I will ignore, and it's PPI, as I find that it rarely does anything. As long as it's by itself, PPI just kind of just hangs out. CPI, obviously not. I will be leaving that alone. But I do find that the PPI can just fizzles out. There's not enough. If it's coupled with something else, yeah, sure, but I don't mind the PPI.
Yeah.
Yeah. There's like multiple
or
ones
even
coming
seeing
out
like
at the same time.
Yeah, I mean, even with the low impact, I mean, if you get three or four low impact events that are really hot or really cool, I mean, even that can kind of act similar to a red folder event sometimes, or orange folder event.
Yeah,
unless you're in crypto.
Yeah. I'll mess
you
too
just
much
get
with
one
that.
random
Like
person.
Mr. Pete saying your impression of Michael sounded more like the sheriff from Dukes of Hazzard.
Dukes?
That's funny.
Oh.
That impression Michael says.
The sheriff. Oh, my name is Roscoe P. Coltrane. Right? My favorite is
I love that.
Something like that.
Oh my gosh, what's that other movie? Oh my gosh, the one where he drives a Trans Am, Burt Reynolds. Oh my gosh. My name is Buford T. Justice. Come on, somebody knows that movie in the chat.
I've got no idea.
Now that you bring up like movie stars, guys, I was reading the other day that Josh Brolin, you know he is that famous actor from No Country for Old Men.
Oh yeah.
What's his name? He used to be a day trader to support himself before he became an actor. Trading stocks.
Wow. Yeah, I remember hearing about that.
I read an article the other day. I was like, what?
That's crazy.
I really like him as a good actor. I enjoy his movies.
He is.
But that I didn't know.
Yeah, No Country for Old Men.
Yeah.
Great film.
Yeah.
Who's the guy in No Country for Old Men that's is the psychopath? What's his name? He's Spanish, isn't he?
Yeah.
Which movie is that?
Name is No Country for Old Men.
No Country for Old Men. Where he's like the hit guy.
Oh.
Yeah, what's his name? He's awesome. He's in James Bond and all that.
Yeah, he's great.
Oh, it's Javier Bard.
Javier, yeah.
Yeah, he's great. He's great.
That's the one.
When's the Bockers next playing? Do you know?
We're playing this Saturday.
Oh.
Springboks. Saturday.
We're playing this Saturday against Argentina, so that's going to be. Geez, I'm not sure where in the country, but that's generally like 5 p.m. our time. So it'll be like 3 hours from now, sort of just give you sort of like a time estimation. And then we're playing them the weekend after in Twickenham, funny enough. So we're not going to play in Argentina. I don't know why, but yeah.
Yeah. Well, yeah.
You guys are taking on the Kiwis, right? All Blacks.
Yeah.
It's going to be fun to watch.
Yeah. Well, technically, I'll go for UK versus Australia is the game that I'm looking for on the 2nd of November.
Smokey and the Bandit. That is it.
Someone actually knew it.
Yeah, I figured somebody would. Mr. Peeps got me. Watch old bandit run.
Hey, Charles. Benito.
If y'all have not seen
Benicio.
Smokey and the Bandit, you gotta watch it. You gotta watch it. All three of them, but the first two are the best.
Well,
you got a
it's
long
been
way to go. Short time to get there. Come on, Bandit.
gosh.
Watch that bandit
It's
run.
time to go sleep a little bit, Tiger. You've been pulling long hours. Anyway, guys, that brings us to the end of this session. We got 20 seconds left. Yeah, so I'm still in that trade on the DAX. I'm again wanting to hold it for a few days. Alex, really good trades you got going there today. So
Yeah.
good stuff. Yeah, hopefully you're going to set up there soon, Tiger. And to all of you, thanks so much for watching. We will have the pre-market pulse coming up about 15 minutes time. I'm actually going to do that with Coach James, so please do stay tuned for that. So we take you into the New York session afterwards. From our side, all the best. See you very soon. Take care, guys. Cheers, everyone in the chat.
Good night.
Cheers.
Good night.
Adios.
Have a good one. Adios.
Hola Prime. Trade with transparency.